We are live. I got to turn my computer down, otherwise we'll get an echo, but it is Monday. You know what that means. The market is back open, and honestly, it doesn't know what it wants to do today on this Monday. A few minutes ago, or I should say more so about like an hour ago, markets were up. They were up about more than 1%. Now they're back down again. Well, actually, I don't even know. Let me check again. Yeah, we're back in the red slightly on the Qs. Let's check in on SPY. Down about 0.4% on SPY right now. But we've got a packed show today. We will be talking about the Berkshire Hathaway convention over the weekend. Some takeaways from that, some lessons from the Oracle of Omaha, Warren Buffett himself. We also will be talking to Jeffrey Kamys about sports betting. He was on a couple months ago. Glad to get Jeffrey back on the show. And then, of course, it's Monday, so we will have Matt Hammond from IPO Warriors at 12:20, Jake Wujastyk at 1 p.m. from TrendSpider, and then Shawn Cruz at 1:30 from TD Ameritrade. Spencer.
I'm here.
Whoa, you were just there.
And now I'm here.
And now you're here.
What's up?
Crazy how that works.
Crazy eights. What's going on, everyone? What's up, man? How's your weekend?
It was good, man. How was yours?
It was nice. I went over to Luke Jacoby's house
For the
very first time. I finally got an invite. He bought his house a year ago.
How
and
was
I
it?
finally got invited. It took me a year, but I finally got an invite. How was it? It was nice. We chopped some wood.
Hell yeah.
Chopped some wood.
Hell yeah.
And then I watched Luke.
Very manly of you.
And then I watched Luke overanalyze how to build a fire in the fireplace.
Oh, really?
Yeah.
Was it like some paralysis by analysis?
It was just like Luke sat there for like a half hour mapping out how to build a fire.
Okay.
Which like you could just put the line. I know there's a way to do it, you know.
Hey, everyone's got a way to build
but
a
like,
fire. Some people would say it's even an art.
He was like building a Jenga. I swear it was like building Jenga in there. But anyway, it was good. It's a good time.
Well, I don't know if you've been watching the markets past few minutes, but we've just been kind of seesawing, bouncing around. Doesn't really know what it wants to do today. What Mr. Market, how he's feeling, he or she's feeling today.
Yeah.
Just green, red, up, down.
What about that Friday close though?
Oh
I don't know if you can remember that far back, but it was pretty brutal.
Yeah, I want to say the Qs finished down 4.5% on Friday.
Yep. It was tough.
That was one of the worst days. April was the worst month for investing for the stock market, I should say, since 2008. So even March of 2020, when we had the COVID crash, we saw enough of that V-shaped recovery on the back half of March that it made that March not as bad as this past April. So, we love to quote Batman. Not the new Batman on this movie, but the old,
I'm Batman
trilogy.
Like that one?
The Christopher Nolan, Christian Bale.
Where's Rachel?
Yeah, that Batman.
That Batman? Okay.
Well, more so Alfred in that Batman, Michael Caine.
Yeah, what does he say?
Well, he says a lot of things, but one of the things he says is that the dawn is often darkest before
the night is darkest just before the dawn.
Something like that.
But the dawn is coming. That was not Alfred. That was Harvey.
Oh, really?
That was Harvey Two-Face.
Are you sure?
I am sure. The night is darkest just before the dawn.
Positive?
But the dawn is coming.
I could have sworn it's Michael Caine.
I'm pretty sure.
All right. Well, the other time we quoted Michael Caine on the show was when he says, "I hate to," or he says, "I'll tell you so, but I won't be the one doing it."
Oh man, you're butchering that one too.
I don't know.
He says, I something about just say. Bruce Wayne says to Alfred, I know you want to say I told you so, and he says on that day I won't want to say it.
I won't want to whatever. Either way, maybe the dawn is darkest before the day is darkest before the dawn with April talking. It is pretty dark.
It's pretty dark out right now in Detroit.
It's
pretty overcast on this the first day of May. Hey, shout out to all you It's Gonna Be May memers out there. I know everyone loves that meme. All right, smash that like button for me, please. Let's play that intro. Start the show up. This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a
breaking news.
All right, should we start with the Berkshire meeting over the weekend? I don't know how much you watched. I didn't watch the whole thing, full disclosure. I thought I was going to, but I had things to do.
I more so just saw hot takes on Twitter.
Okay. Okay, so I guess we'll start. Let's start with like what the news was, right? Berkshire's earnings. They're the only company that I can think of that doesn't do an earnings press release and a conference call. It's a whole freaking weekend for them, right?
They do that once a year, right? And then the other quarters, it's just
they don't do conference calls though.
What do they do? Just put the numbers out?
They just put the numbers, yeah. But the net of it is that Berkshire Hathaway spent, or I think the number was like $40 billion in cash last quarter on.
That's got to be a record for them, right?
I don't know. It's certainly a lot. We know they bought HPQ. We remember that. They're buying Allegheny, right?
A lot of Activision.
Which is ticker Y. They bought way more Activision.
Yeah.
They had, at the end of 2021, Berkshire owned 1% of Activision. Now they own over 9% of Activision. They increased their stake in Activision ninefold in the first
and you know what
4
that
months
tells me, Spencer?
of the year. What?
Is that basically Buffett and Berkshire saying this market environment's going to be tough. We're going to take wins where we can find them. And a 10% ROI or whatever they're aiming for on the Activision deal, they think is a better investment than a lot of other opportunities out there right now.
So it tells me that, I guess it says two things, right? It says one, that they're confident the deal is going to go through, right?
Yeah,
right,
100%.
And then the other thing is, like, I suppose even if it doesn't, I suppose because they bought Activision. This is weird. They bought ATVI before Microsoft did, so like clearly they had an opinion on it before.
Warren likes to play Call of Duty.
It was not Warren Buffett though.
Okay.
It was a different, they have different managers, right? It was one of the other guys that bought Activision the first time, but this time, like all through Q1. That was Warren Buffett. He was doing the risk arbitrage there. So he clearly wants to do the risk arb play, but somebody over there also has a bullish thesis on ATVI regardless of the Microsoft deal because they bought the stock before Microsoft did. Now, the question is, whoa, I'm seeing a new kind of microphone cover we got. Yeah. That's pretty sweet. The question is, if you're me, Aaron,
okay,
I'm also doing the risk arb. Right, I bought Activision like a month ago, right?
Yeah, Spencer's a risk arb trader now.
I am. I own Twitter and Activision.
Yeah.
So if you're me, do you sell today?
Because you've done more DD on the deals than
Warren Buffett.
Well, than all the other investors. So you have a better edge of what the price
I have
really
no
is.
edge. I have no edge. But
so
wait here. Let's find out. Maybe I should, before I asked you that, I should have really figured out where my cost basis is.
My point being is more so if in a great market environment where there is a plethora of good investment opportunities.
Wait, are there?
No.
Oh, okay.
I was saying in a good market environment where there is a plethora of good investment opportunities.
Okay, that's not this one though.
No, you're not. You're not chasing 10% arbitration deals or whatever the return would be.
Arbitrage. You said arbitration.
Huh?
Arbitrage
deals on Activision. You'd be chasing those other good investments that you'd want to hold long term.
Yeah. So that's not what the market is saying though. So you're saying that doesn't apply here. My cost basis is $79. $79.23 is my cost basis. So I'm in the hole by $2 right now.
I don't know. I mean, you want to sell already or something?
No, I don't want to sell. Do y'all think? Yeah, Zed, same thing. Okay. Technically Zed is correct, but I'm the one doing it. So yes.
So you're a risk arb trader as like a money manager, not even in your own account.
No, I just thought it was a huge discount. I mean, we know the takeover price is 95. Okay, so if I'm right, I'm gonna make what I say? I'm gonna make $16 on this trade, right, per share.
The other thing we have to talk about with the Warren Buffett is Apple. And Apple's actually having a down day today after it seemed like the market didn't really know what it wanted to do with Apple after the earnings report. It was good by all means, but having a good earnings report may not mean that much in this market environment.
No, it doesn't.
So Apple's trading lower today around. And so here's my thought process with Apple, Spencer, is there's just so much weakness in the market, and Apple's not, Apple's not immune to that market weakness. Apple may be seen safe as a safer stock than other tech stocks, but it's not immune to market weakness.
No, not in the slightest.
So I think in short term, we could see some more pain from Apple, but at some point, this becomes an incredible opportunity to invest in Apple at like a 20 PE.
It's not a 20. Oh yeah, it is forward PE 26. 26 might still be a little bit high though.
Well, I'm saying if it keeps going down from here, I'm saying I'm anticipating more weakness in the short term. But I'm saying if Apple gets down, I don't know, say 140 a share.
Yeah, maybe. So Warren Buffett bought more Apple. He bought going back to the
Shaky's asking, is he drunk? Is who drunk? Warren Buffett for buying more Apple?
I don't know. He bought Apple. He bought Activision. He bought Allegheny. He bought HP. He bought Chevron. He bought more Chevron, and he bought more Oxy. He bought preferred shares of Oxy. So he deployed a lot of capital last quarter or in the last 4 months, right? And if that's any indication, he's always looking for a deal. His style is, we know he's all about value. He's all about value. Clearly, he's seeing opportunities out there. And I would just say, if you have a long enough time horizon and you're absolutely terrified to buy anything right now, look at what Warren's doing. He's buying into a down market.
A lot of Chevron too.
Yeah. He's buying it now. He talked about this. Like they're not forecasters over there. They don't know whether the market's going to go up or going to go down, but they're looking for deals regardless. He's talking about how they don't make decisions based on what they think the market would do. They don't hold off on a deal because they think the market's going to go down. They don't know what the market's going to do.
Okay. Shout out Chris Kachi saying it's going to be a 26% return on if
right, because they bought the stock before Microsoft did.
Okay.
Right? Their first stake came in way before this, not way before, but their first stake came in a few months before the deal was announced. So remember, the deal was announced in January, and then a few weeks later, the Berkshire 13F comes out from Q4 that unveiled their stake. So they beat Microsoft on this by a couple.
How are you feeling on the Twitter deal? I mean, you think
Gosh,
now, is it like a coin flip in your head?
It's probably. I really should get out of this. Right? I feel like I'm basically flat. Right? I'm down like half a buck or something. I should probably just get out. I feel like, right? I mean, the longer this goes, okay. So I miss out on $5. What do you freaking do? I feel like I should just get out of this one.
I think coin
flip. The risk reward is just not there, right?
I think gun to my head, you have to tell me pick a side. I'd say it's not going through, but that probably means that it is going through.
Yeah, man. My cost basis on this one is like high. It's like 49.80 or something like that.
Yeah, Andy O saying ATVI would be down 25% without the buy.
No, it'll be down more than that. We talked about this morning.
How much you think it'd be? I think it'd be down. Well,
so okay. Wait, no, this is a good exercise. So let's look at ATVI and we'll compare EA and we'll compare Take Two.
And ATVI just had really lackluster earnings.
I have no idea what the earnings were, but I don't care.
Vanguard, the new Call of Duty.
So wait here. So let's just zoom in on this. Okay. So the ATVI deal with Microsoft was announced in January. All right. Since that time, we'll go right here. Since that day, EA is down 9% and Take Two is down almost 21%. Okay, so ATVI is not going to go back to where it was when the deal was announced. It's going to go back to where it was when the deal was announced and then take off another 10% or more, right? So in this case, we're talking, what are we talking here? We're talking $65 was where it was pre-deal. So go 65 and just take off 15% for fun. Okay. So we're talking what? What's that? High 50s? What? $56? Sure. We'll just call it $56. So let's say the deal gets called off with Microsoft. ATVI is going in the high 50s. It's going down $20 or potentially more in an instant. So that's the risk there. Take Twitter is a bit of a different story. I think I should just sell. I mean, it's great. Selling an up day, right?
Okay, so I don't know if you saw this. I honestly, I've been seeing so many headlines on this. I stopped like reading them just because
it's all too much, man. It's all
too
noise.
much.
It's all noise.
But I haven't even been looking into like which headlines are legit or not. I saw one though saying that Elon already had a replacement CEO picked out.
I saw that too. But then I didn't follow up about it.
It's exactly what I did.
Did you follow up?
No, I was like, I'm sick of reading about this, so I didn't read about it. But if it's true, then that would make me more bullish that the deal goes through, that they're that far along that Elon's starting to like do shit like that.
Yeah.
To me, it just feels like one of those things that's gonna drag on, and then there's gonna be some reason that's very convenient for Elon to kind of back out before it's too late.
Yeah.
And I think it would end up being a bigger headache than it's worth for him owning Twitter.
It probably would be, especially with Europe, right? Europe,
right?
Yeah. So
you have to deal with
deal with the EU.
Yeah, it's not just dealing with U.S. regulators. It's dealing with EU, and that's not just the EU. It's other countries' regulators as well. It's you. Yeah. You take on all this responsibility, all this liability, really.
Yep.
And for what?
For.
I mean, owning a multi-billion-dollar company, it's a...
Wait, I was listening to a podcast and they brought this up. Is Elon Musk buying Twitter? Is that the single largest purchase by a person in history? Like by one individual? Like has anybody paid more for anything than Elon is paying for Twitter? You think?
Great question.
I think anyone's what is it? It's 44 billion, right? Something like that. 45 billion. Has anyone ever spent $50 billion on anything? I don't know.
So, that just reminded me. So, have you seen? So Bill Gates. Have you seen the kind of people talking about?
Yeah, a little bit.
What?
I've seen like the memes and stuff.
Oh no, not the Bill Gates versus like Elon Musk.
Oh, okay.
So like, there's like people like, oh, Bill Gates is buying up all the farmland. Like, this is something we should be worried about.
No, I haven't.
Okay, well, there's been a lot of talk about Bill Gates and farmland.
Okay.
And so I was doing some research into it. Actually, so Bill Gates is the largest private holder
of land
of farmland in the United States.
Okay, that's good to know.
But yeah, can you guess what percentage that kind of makes up of farmland?
1%.
Less.
0.5%.
Less.
0.25%.
The less.
Just tell me.
0.03%.
All right.
So it's just if you see something next time about how Bill Gates is going to control our food supply and stuff, just know that 99.97% of farmland is not owned by Bill Gates.
Let this also be a free plug. If you want to invest in farmland, there are ways to do that. You can go to farmtogether.com or acretrader.com.
Acretrader, baby.
And they will let you invest in farmland.
Use the code Benzinga.
Use the code Benzinga. Wait, while we were just on the topic of Elon Musk, we're not going to talk about him really much today, but I want to give my review of the SpaceX documentary.
Okay.
Now that I finished it.
Yeah.
My review is this. If you're the kind of person that likes watching documentaries about things when you know what already happens, then you'll probably like it. If you don't like watching docs when you know the ending already, then you'll be bored. Is my take.
Great review.
Because we all know a lot of the documentaries is based on the build. Obviously, it's the story of SpaceX basically, and talked a lot about the Falcon launch from a few years ago. Remember when they launched a lot of that. Obviously, we know how that ends, right? Like they went to space and it was successful. So, if you know the ending and you don't want to know more, then that's fine. You don't watch it. But I like watching those things, so I thought it was cool. Real fast before we move on from Warren Buffett and the Berkshire thing, I don't know what it was. Someone in the chat, let me know if you agree or not. But like, they seemed like super I don't want to say grouchy, if that's like the wrong word. I don't know. Or maybe they Warren and Munger just like didn't give a shit about like anything like about.
Well, they seemed really fed up talking about the Robin Hood stuff.
Yeah, Charlie Munger more so because he's always been like the brasher of the two of them, but they just both seem like throwing darts and just like I don't know, like I almost want to say a little bit out of touch. A little bit. I mean, when you're that old, you can kind of say whatever you want.
Well, okay, so I said that I more so saw a lot of hot takes on Twitter. That's kind of how I followed this event.
Yeah.
Which definitely the thing on Twitter that got the most attention was Warren Buffett's comments about Bitcoin, saying I wouldn't buy all the Bitcoin for like $25 or whatever.
Yeah, and also the stock market has become a casino. Yeah.
When has it not been though? Honestly?
That's what I'm saying.
Like, when
has it not been?
If you went to I'm sure there were like 80-year-old guys in the 80s that were like, oh my God, this thing has gotten out of control. It's become a casino. But the Bitcoin thing, because people were like, oh, that just makes him a bad investor. You wouldn't buy like something worth billions of dollars for $25.
Yeah.
Like at the end of the day, if Warren Buffett was really presented with that opportunity, he probably would buy all the Bitcoin in the world for $25 if he could sell it for billions of dollars.
Yeah.
But I think that the sentiment is what he's just saying is, that he doesn't think there's value in cryptocurrency in Bitcoin.
Right.
And that to that point, it's funny because when Bitcoin's kind of in a bear market, you have a lot of these like traditional finance guys, really battering Bitcoin.
Yeah.
And they're kind of like saying, look, Warren Buffett, whatever.
Yeah.
If Bitcoin's back in a bull market and he's saying this, it's, oh my God, this out of touch old guy has no clue what he's talking about, yada yada.
Yeah, but when Bitcoin's down, it's like, see,
exactly. That's what I'm seeing right now. I'm seeing a lot of people, not in the crypto space, obviously, but in the traditional finance space, see Warren Buffett. Even Warren Buffett is saying that Bitcoin is overvalued and not worth anything. But if we're in a bull market, it's the opposite.
Yeah. I mean, I don't know. It just I didn't watch the whole thing, but it just seemed like the two of them were just a little bit I don't know if I want to say sanctimonious is not maybe the right word, but just overly critical of everything about today, which I guess is fine.
I think you earn the right to be ornery.
Ornery is it. Yeah.
I think you earn the right to be ornery old when you're that old and done this for that long. I'm
a huge Warren Buffett fan, right?
And Andy brings up a good point too. That's Warren Buffett's been saying that about Bitcoin this whole time. It's better to me than like some of these guys that go from saying, oh, there's no value in it to, oh, now they're a Bitcoin bull to now they're bearish. Like if you're going to have conviction about, which to be fair, I'm kind of more wishy-washy on crypto as a whole than I am super bullish or super bearish one way or the other.
Yeah. I mean, in Berkshire, in Buffett's defense, like they have been vindicated so hard because they were notoriously slow to invest in technology, and now they have a lot of Apple. They bought HPQ, but like tech has just been crushed here, and they own a lot of non-tech, a lot of like oil and staples and that kind of stuff has worked better than tech has. Was it you that? Oh no, it was someone in the chat. Yeah, Easy Mike's mentioned the Bitcoin ETF. Dude, I don't know.
So my take on Bitcoin right now, Spencer, is just that there is like use cases for it. I don't think it's going anywhere. It'll be around. I'm not in the camp that like, oh, this is going to replace money and take over going
to replace all the money.
Replace all the currencies. It's just like, I think the US dollar will still be here in 20 years and still be our currency of choice. So whatever that puts the market opportunity at for Bitcoin, I'm not sure.
But I know I'm getting off topic here a little bit, but like because he mentioned the Bitcoin ETF, I don't know what the SEC is doing. Do you know what ETF launched today, Aaron?
What ETF launched today?
Yeah, we have a new ETF today. I'll just tell you because there's
ARK triple leveraged.
Well, you're very close. Double leveraged ARK.
Are you sure?
I'm sure.
Okay.
Why?
because T, like TQQQ is like triple Qs. Like, so the T makes me think triple.
No, it's double.
Okay.
It's double. So TARK, Matthew Tuttle, who runs the SARK, the SARK ETF, today is the launch of his next great concoction. Double leveraged ARK. ARKK.
I might buy some.
If you want to express a short-term bullish point of view on ARKK, you think ARKK is going to go up imminently, you can express that by buying TARK. This will do double of what ARKK does on any given day. So ARKK goes up 1%, TARK should go up 2%, vice versa. This is allowed, but a Bitcoin ETF is not allowed. Go figure.
What if we just go full YOLO on TARK? Just boom or bust.
Why would we do that?
I mean, you're either gonna make a lot of money or lose.
Or you're gonna lose all your. I mean, have you seen ARKK? And I'm speaking as an
ARKK is back to where it was pre-COVID.
It's below that, isn't it?
58 pre. Oh yeah, it's well below.
Oh no, it's not. No, well, no, no, it's not because
yeah,
the COVID low was on ARKK was 33.
Oh, okay.
So
I'm talking about before.
Yeah, we're right at pre-COVID for sure. Yeah, definitely.
That's crazy. I mean, this thing ran from like what $48 to 150 at its highest, and now it's back down to 49. I mean, at some point, right? This is
no, that's what we've been saying. At some point. At some point. No,
maybe not now. I will buy some TARK at some point because that's just a true degenerate ETF play.
At some point. We've been saying that for a year now. At some point, maybe not for a year, but maybe the last 6 months. Certainly at some point.
I'll tell you, I've been saying that a lot on Baba, which I still think maybe this is that point for Baba, because Baba's actually up 15% this past week. Compare that to other stocks in the market, and we did get some kind of macro news with China saying they wanted to play nice with their.
Okay, so I'm glad you mentioned that because that was that pop that was that Friday morning.
Yeah, like 10-15%. It
was Friday morning.
We sold off from there. Now recovering a little bit, but if we can hold this level, if we can get above $100 and hold that, Spencer, I think we're gonna have to start looking at Baba.
I don't know, dude. These gains never hold. Yeah, that's a great point, Chris. Munger was asked about this because he was the guy that kind of he bought Alibaba, and he still likes it, which is a little bit surprising, but the gains haven't held. So I don't know. I don't know how you can do it. I really don't. Yeah. It's just, where's my pro? Oh, there it is. You can go Baba, go K-Web. I'm never buying these things again.
Hey,
honestly.
That's fine. I mean, there will be an investment opportunity out there. I just don't know.
Well,
now's the time.
There will be short-term rips, and we've had several of them, right? Like K-Web went from 21 to 30 in like 2 days. So there will be short-term rips. I just don't know. It takes a long time for markets to bottom like this. So
you're right.
Just hands off from me. There are many things one can do with their money. Investing in China is not what I will be doing with mine. One other market that I don't have any direct exposure to, but I could be interested potentially. Again, it's one of those things where it's like one of these days they'll stop going down. Is sports betting, right? We've talked about this. You've taken some plays here and there. I have not. I've been hands off. I wanted to buy a couple of sports betting things on the way up, never did. Now here we are, a year or two later, and at least from a capital market standpoint, the picture is looking not great. But from a fundamental standpoint, it's looking a little bit better. So joining us now to talk about this is Jeffrey Kamys. He runs the iBET ETF. He was on our show a few months ago, and let's actually look at like what is happening fundamentally in the sports betting space, because there are actually good things. You wouldn't know it by looking at the stock market, but there are good things happening in the space. So let's get Jeffrey on the show right now and talk some sports betting.
Hey guys.
Hey Jeff, how are you doing?
Doing great.
Great to have
Thanks
you
for
back.
the introduction. Like if Amazon and Alibaba are the deep end of the pool, we're in the deepest end of the pool in the sports betting industry. But it's starting to show some really good progress in terms of where these companies are changing kind of their attitudes about how they're investing. A lot of the companies, they went for the customer acquisition model where it was just advertised at all cost.
Yep.
And we saw, DraftKings and some of these MGM Caesars, they were on every commercial. It seemed like every ad. DraftKings, my brother who doesn't care about sports really or bet on sports, he's like, DraftKings is everywhere. Like, so they became ubiquitous, and they're sort of the poster child for the bad behavior in the industry. And we're looking at them as the bellwether for when we're going to turn around. I think we're starting to see some of that behavior change. There's a couple companies I can talk about today, something like a gambling.com, which is essentially where the industry is going. The European companies have done a much better job of creating affiliate relationships. And that's sort of where this is going. Gambling.com, essentially they bought, I know you guys on the show are fantasy sports players, right?
Yep.
And I had a company, I told you about it last time. I had a company called Dr. Stats Fantasy Sports in the 90s. I had it for about 16 years. Well, gambling.com just bought RotoWire, which I'm sure you know of, which is a very active, one of the legendary companies in the space. Yeah, it's been around. Sure. It was around when I was doing it. I was in fantasy leagues with those guys, and we used to do those, site multiple company fantasy leagues. And they're essentially that's to target the sports bettor. And what they do is for MGM, Caesars, all these different companies, they'll create affiliate relationships, meaning their content will generate the potential client, and then they'll be in sort of a partnership, whether that's over a period of months or a year. Depends on their affiliate relationships, but that's where the industry is really going. That, and I think we saw, I think I was on before NCAA tournament. We're seeing companies like DraftKings where they'll do teaser bets now. I remember Gonzaga was even money in terms of you could win up to $50 with like DraftKings, just betting the line at 0, just picking out a winner. So you're seeing some of that kind of happen in the marketplace too. But gambling.com is a really interesting stock. Okay. Ticker symbol GAMB. That they're actually showing some of the highest, margin, even a margin like 40%. So they're doing very well, actually, playing on sort of the periphery of these big name casinos we know about.
All right, so Jeffrey, my question is like, what metrics do you look at? Should we be looking at to really understand which of these companies are actually doing well, and which of these public companies are trading down? Mostly because of sentiment and not because of anything else. I guess GAMB would be one of them. But like what metrics do you look at to judge and say, hey, this company actually looks healthy to me?
Well, I'm sort of looking at companies that have, and we made some adjustments in the portfolio when we started to have some more value-based, that's where the market is right now. We're looking for stocks that have low priced earnings. That would be the Buffett sentiment. And there's some of those in our portfolio. A company that I like that just had another great earnings is Boyd's. It's a boring kind of name in space. It's never heard on a lot of information on TV, but Boyd's just had another great earnings report. When they announced they had delivered record revenue in the first quarter, EBITDA margins in their local Las Vegas, their biz margins were 52%, downtown Las Vegas margins 50%. So they're doing really well. I think that we want to see more of the companies that are coming out this week. We're going to have really good earnings to watch, which MGM is today. We're going to have Penn National Gaming and Caesars. So, and we're looking for those companies to do better in those areas. And I think the margins are there, but the cost and the expense right now is so great. We did see actually we're getting to, you're going to see that this market's maturing when you see acquisitions. And today there actually was some really interesting news. A company out of Sweden called Leo Vegas, actually MGM put in about a $700 million offer to buy that company, and Leo Vegas stock, which is in our portfolio, is up about 40% this morning.
So go
ahead. So Jeffrey, do you think we're going to see more acquisitions in the space? DraftKings, the Pens kind of scooping up some of these smaller players?
100%. And I think you're going to see once we get to when people ask me about where we are in the space, because we always want to use that baseball analogy of innings, I always say this is still inning 0. we're in inning zero because we need these companies to mature, figure out what their acquisition strategies are going to be so they're profitable. And I think, that's what we're seeing. So you're going to see we're in the Wild West, just like the technology industry of the 90s and the O's, when companies would come out there and go public. And then we're going to see who really lasts. And you're going to see people incorporate other parts of strategies in their companies. I think one of the things that's interesting is a lot of companies on the periphery who are actually helping, like a company like GIG is one. And they're essentially they're like the sales force for sports and gambling.
Yeah, and then you have like the data provider, like Sports Radar is the
that's
data
a great
provider.
That's on my list to talk about.
All right,
Sports Radar, I think they're in-game betting is supposed to grow at a CAGR rate. I don't do a lot of in-game. In California, it's not legal here to do that, and so you'd have to call somebody if you were going to do that. But in-game wagering is supposed to rise at a CAGR rate of like 6% over the next 20 years, and I think that's where Sports Radar comes in. It's a really interesting proposition because their AI and what they're delivering is really changing the face of it. That's a good pull on that, by the way.
Thank you. And yeah, I agree too with just like what you're saying about the industry being so new that it's going to take a while to kind of see how some of this plays out. And I think from a more macro standpoint, when you take into account the overall capital markets right now, for so long we were in this kind of easy environment, a lot of money flowing around, that it made, I think, a lot of companies kind of complacent. Whereas now when things are tightening, it's going to be more, dog eat dog, that the better companies are going to survive and the ones that aren't are going to get bought out or go under.
I think you're right. But I also think one of the things that we know about if we are going towards any kind of recession is that the vices win. People are still going to want to put a wager on a game to escape. People are still going to want to have a drink. People are still going to want to go out, and the vices usually stay around. And so I think that even in a recessionary economy, the other thing too about this when we get to like inning 1 and 2 and 3, we're going to start seeing the profit come in. The margins in this business are going to be incredible because it's going to be so digital. The hotels, I love to go to Vegas. I go probably once a month, and sometimes twice. And I enjoy it. I think the hotels are destinations or rewards for the players now. They're not so much the epicenter of where it happens, but they're going to become the rewards. So you go there and you get the free meals, or you get the free stay, or you get shows. And I think, and most of this is going to be online. We know because we see our friends doing it all the time. We're at 33 states. We have a bunch of new states that are coming on. I think we're seeing the biggest domino really to follow is going to be California and how they divide California. But the margins in this, because so much of it's going to be online, are just tremendous for these companies. So the investment right now is technology and AI.
Margins are okay, but we've seen the customer acquisition cost is so exorbitantly high that it hasn't been able to offset that.
Yeah, not yet. I agree. I think we're going to see one more wave of that in November if California does push, because really we have Florida and Texas are really the next 3 big ones. But we might see a little more of that in November, December, January.
I was surprised. We were just down in Florida for a conference a week or so ago, and I didn't realize that Florida didn't have it because we're up in Michigan where it's legal, and I have the DraftKings app. And I was like, it's Florida. Like I would have assumed they don't care, but I guess they have they have casinos on their Seminole.
They're on their reservations.
Seminole territories.
So wait, if you're on their reservation, can you do it?
No, I don't think. I think mobile. It's just statewide. There's no mobile. I don't know.
Well, and that's what, and that's one
I've been to that Hard Rock. That Hard Rock is awesome. The Seminole, it's amazing.
It is funny. You would think Florida lets everything happen, so they would have it'd be no problem. Like, hey, it's Florida. Come on, give me a break. Except for Disney now, that's not happening.
Like, I could go buy an AR-15 quicker than I.
But you can't bet on the game.
Then I could place a $20 bet on the football game.
Makes no sense.
By the way, industry-wise, and I was listening to your show a little bit. That guy is very clever as a marketer. The Tark.
Yeah. Tuttle. He's great. Yeah.
I mean, when you think about really what he did, is he took her fame and has made a lot of money on her fame, doing very little.
Yeah.
Good idea.
Yeah.
He had a good idea, executed on the idea, sold it to.
And now the idea,
I don't know.
Yeah, the idea now that he's doing a double leverage bull is equally.
I just like, look, and if
you said illegally.
Legally, and I just meant in terms of the timing, just that he's doing.
If there's a market for it, great. But why is there a double ARK ETF and not a Bitcoin ETF. Makes no sense.
Well, really, it's a indictment on. I mean, Kathy Wood allowed that market opportunity. She could have put out her own SARK.
I guess she could have. Yeah.
I think though she's an advocate of stocks and growth, and I think that's her.
Yeah.
That would be so anti her kind of. You know, she's.
Right.
I don't think the way that I look at this person. I think he's done it was brilliant his timing hitting this and hitting the double leverage is probably a good play as well. But I just
Jeffrey,
say that, yeah, I'm sorry.
We got to ask you. So, like you mentioned, earnings. It's a big week for earnings. We're gonna for the casinos, right? We have MGM, we have Caesars, we have I think Wendy's this week. We have Penn, we have DraftKings. Do you have any expectations or any predictions as far as what we'll hear from these companies this week?
Yeah, I think we're going to see some better numbers out of Penn. I think that they have a different model. I think that they've been doing a better job. I think DraftKings, you saw a lot of shutdown in advertising right after the Super Bowl. And I think that they knew that they wanted to go in a different mode. And I think from what I'm hearing from companies like gambling.com, who are seeing an uptick in their product because they're changing the model. And I would, if you'd notice, some of these companies like have gotten out of the space. Churchill Downs just had earnings, very good earnings again. And they've actually removed themselves from the sports betting space and just keeping their core hub group of what they have together. They're not going to go for online sports betting. So I think what you're going to see is improved numbers. I don't think they're there yet. I think we're looking towards third and fourth quarter for when we're going to see really good numbers out of these companies.
Okay, so more of a wait and see type.
Churchill, I didn't realize Churchill reports right before the Kentucky Derby. They should report after.
Well, it wouldn't be reflected anyway. But
wait, so Jeffrey, this is kind of so you mentioned that you think the hotels and whatnot in Vegas are going to start becoming rewards for mobile players. You're saying?
Well, I think that's part of it. I know a lot of my friends who bet online who don't live close and only go to Vegas once or twice a year get a lot of rewards for their online betting. And I think that's a big part of it. It bring you back to the epicenter, but I think a lot of this play is going to ultimately be online for the near future.
Who does, like I mentioned, I use DraftKings, and it's not like if I was using Caesars, obviously, Caesars could offer me at the Caesars Palace. Who does DraftKings have partnerships with in Vegas?
Actually, they don't have as many, and they're kind of, that's what they're actually kind of block. What's going on in California. Let me give you an example. They're actually trying to block somebody like DraftKings because they want the California legislation, the Indian reservations want them to have brick and mortars to actually approve them. So yeah, DraftKings is thin in that, and that's why Penn wanted to buy. I want to say the Penn tried to buy the Cosmopolitan.
They bought the Trop and then sold the Trop in COVID.
Right. But they wanted the Cosmopolitan because the demographic was so good. That's a really great demographic. That's 20 to 40 year olds.
Who owns the Cosmopolitan? Because
it was bought by MGM Properties. They never owned it.
Yeah.
It used to be owned by one of the larger like investment companies owned it.
Blackstone, BlackRock, whatever.
Yeah, that's right.
God.
So yeah, I know DraftKings, like there's a couple casinos here in Detroit, or I think one that has like a DraftKings sports book in it. But that's what I was curious about. If DraftKings had making that leap to buying one of those kind of premier hotel and casino resorts in Las Vegas, because
that's not really a big part of their business yet. They're trying to do moreover, what they're doing is what you're seeing now in this space is a lot of affiliate deals with the major league teams. Every week, I think the Yankees just had a partnership. Cleveland Browns, all the teams are looking for partnerships with these sports betting companies, and their reward is that they're going to get the kiosk in the stadium. That's what they want.
I just wonder what my DraftKings points gets me on here. Like what can it do? I'm going to look into it. I'll let you know next time.
I also want to add, because I was in Vegas. For the Final Four, and I had this image in my head of obviously it was a very big Final Four with Duke and UNC, and I had this image that I was going to be at a sports book. It was going to be just bumping, just hundreds of people, jam packed in there, and it was going to be rowdy, and we're all going to be watching the game and betting. And that is not what happened. I don't know if I was in the wrong place. I was at, I don't remember who the sports book was. It was at the Luxor, because I was there for a show, and we just stopped at the sports book after, and it was it was dead. I'll be honest, it was dead. It was not lively at all.
You must have been in the wrong place.
I must have been in the wrong place.
There were people in Vegas.
I must have been in the wrong place, man. I must have been. So I'll find out what sports book that was, and we're gonna short them.
I usually stay a lot of times at the MGM Properties. That's no endorsement. They're not paying me to say that, but I do. That's one of the clubs where I have rewards, and I like going there. And I for the Super Bowl, I was at the at the House of Blues, which was a really great party. And I thought Super Bowl was packed. You couldn't get space.
Fair enough.
If you didn't have a reservation, you weren't getting in.
How about the draft? Did you see how many people were there for the draft?
Yeah,
oh yeah, it was crazy.
It was big.
Yeah, they're getting the occupancy
100,000
numbers
people.
there are off the charts. They're way beyond. And look overall in these stocks, if you look at them, a lot of them are testing their pre-COVID lows. Yeah. So there's opportunities here. If you believe in the market and what these companies are doing, the investment thesis and it's changing. They're changing the way they're doing business because they know that there's more pressure from the investors to start doing it better. And I think a lot of these affiliate companies are what to watch. And I also think that the peripheral companies, something like a company like Gig, who's like the Salesforce of the industry, or like you mentioned, Sports Radar, those are really interesting companies to take a look at.
All right. Jeffrey Kamys, he runs Inherent Wealth, and they've got the iBET ETF, ticker is iBET. Jeffrey, always a pleasure, man, and thanks for coming on today, and we'll talk to you again soon.
Thanks both of you for having me. We'll see you next time.
Hey guys, speaking of Vegas, before we get to Matt Hammond, speaking of Vegas, you know what else is in Vegas?
The FinTwit conference.
The FinTwit conference next week. Next Thursday. Well, no, Friday. Next Friday and Saturday. We'll get there on Thursday. But next Friday and Saturday, the 13th and 14th in Vegas, we're going to be there. Are you? FinTwit2022.com. That's the link. Or even better, I'm going to drop a link in the chat. That link will get you $200 off your ticket when I find it. Give me like 10 seconds to find that link, and I will track it. And I will.
You guys got to come. It is going to be a blast.
Yeah, I mean, I again, as I'm saying, I haven't traveled for Benzinga in 2 years, so I'm like beyond excited to be there. All right, there's that link. I found it. I'm putting it in the chat. Bada bing, bada boom. There it is. Get $200 off your ticket right now. All right. How are we doing in IPO land? Do we know?
I don't know, but I know a man that does know.
Let's find out. Let's get Matt Hammond on the show. Talk. Matt, how are we doing?
I'm doing great. How you doing, Spencer?
Doing well. No real
right.
complaints. I don't know. The market is relatively quiet today, which is cool. What's going on?
I'm happy with quiet, given that the alternative to quiet recently has been not so pretty for my long positions. But in IPO land, we have been doing really well. Last week, you would not know that the market was generally crashing if you were trading IPOs, given that you took them at the right times. These do have familiar patterns. These are not names that you recognize. We are seeing low float IPOs from companies that you've probably never heard of, from underwriters that are not considered sort of the top tier in the financial world. But that does not mean there are not opportunities to make money. In fact, we've had opportunities to make incredible gains last week, and we called them out in last week's show. We've been pretty spot on in terms of recognizing which ones are going to have strong upside moves. The underwriters, the setups do become very repeatable, which is something you want to be aware of. But when we come off of a period where there haven't been many really kind of ripping IPOs, that's kind of the setup that you're looking for people to have forgotten the setup, where the setup is ripe for potential. And last week we called them out, perfectly. We really nailed the biggest runner. And we'll go through those first, and then we'll look at what's next. On the surface, and certainly when I first started trading IPOs kind of exclusively on the debut. No, I'm not buying, just for the people who don't know what we are. Yes, sometimes IPO Warriors, sign up for the newsletter before we get started. IPOwarriors.com. Sign up for the newsletter. We go over kind of an overview of the IPOs for the week here every week. But in the newsletter, I really break things down in terms of what my strategies are going to be, where the entries are, if things line up the way that we're expecting, how I'm going to approach my exits, and a little bit more about what the companies do, what's in their filings. So we go a little bit deeper in the newsletter. And then follow me on Twitter. I am Warrior IPO on Twitter. I kind of do more game day analysis and calling out the the setups there. And then I've been live streaming these to the degree that I can. We live streamed the IPOs last Wednesday, which were the kind of the biggest one in terms of upside potential. And they, as we will see, when I first started doing this, all the low float IPOs were kind of ripping, but this was in 2020, sort of the second half of 2020, and the market was just so hungry to pour money into anything. So any low float IPO with even a hint of something interesting was blowing up, and there just weren't that many low float IPOs. Then they started, I think a lot of companies realized, hey, we can pull off an IPO with even though we don't really make any money, or we have a couple $100,000 in revenue. And now we see them pretty regularly, because in a weak market, you're not going to get mainstream IPOs.
It's probably a sign of the times, right? We're just seeing these like weaker companies. You're not seeing any blue chips. You're not seeing any crazy large private companies that we've all heard of go public, and that probably speaks to,
and you're not seeing
the phase of the cycle that we're in. Yeah,
no, definitely, you're right on that. We're not seeing growth tech companies, all of the ones that were anywhere close from, to being in IPO shape, took advantage of the market conditions in 2020 and 2021. 2021 was a record year for IPOs, and it's because there was so much cash in the market. They do have an impact on what people are trading, because they get people's attention, and they are new. It's like a new product on the shelf. If all of a sudden, you came to the supermarket and there were two whole rows of new products, they'd probably get a lot of interest and a lot of attention, especially at first. And then people would go back to buying, the stuff that they were used to eating. So with these low float IPOs, it's easy to look at them all and say, oh, well, this has only 2 million share float, and the last one that only had 2 million shares went nuts, so this one's going to go nuts. But that's not the way they work. A lot of them will not do well, and then maybe you get a day two rally until that play gets played out. But there are some setups that are repeatable, and a lot of times they have to do with some connection to Asia. We call them stealth IPOs. They certainly seem to be something going on. Certain underwriters, where they're sort of known to do deals where not that many shares within an already tiny float are actually being traded on the debut. We saw that last week. And then there's looking at the pre-share debut balancing, which is when an IPO goes live, there's 2 million shares that get sold to investors, and a certain portion of that will be retail investors. Some of that will be the company itself, or institutional investors, although that doesn't seem to be the case in many of these lower float IPOs. But being able to then see, and we can see this on Webull and a few other platforms, is that if they don't set a specific time when an IPO will start trading, but they do set a time at which the IPO will start being kind of priced. And by priced, I mean priced to open the share trading. So we'll know the night before, say, okay, this IPO was priced at $5 per share. That means that like investors who asked for an allocation of the IPO got their allocations filled at $5 per share. So if you requested 1,000 shares, maybe you get 200 shares at $5 per share. Right. But then there's what prices are actually going to start trading at. And that's almost never going to be the IPO price. It's either going to be at a premium if there's
usually higher. Usually higher.
Except we have seen a lot of these low float IPOs priced lower, especially when it's units and not shares being sold. A unit will be a warrant plus a share. So that warrant, accounts for maybe 50 cents or $1. And then the share price, if they price the warrant at $5, then the share price of the share trading when it opens is going to be lower than the IPO price often. When there is a demand, when you've got, especially last year, you had all these IPOs like Rivian or Snowflake, where the IPO was in such demand, there's so much hype around it, media hype, retail hype, that retail buyers were willing to pay a pretty extreme premium over the IPO price. So we had IPOs that priced, Snowflake priced at 120 and started trading for $245 a share. So when I'm watching these low float IPOs and I see an IPO price at say $5 a share and then debut at $8 to $9, I kind of say, well, yeah, this company is garbage, but there's a lot of people interested in buying it right here. And if other parts of the setup look like something that I recognize that could produce a run, if the volume of that opening trade is relatively low, like 100,000 shares or less, that to me is an indication that the stock is going to fly. And that's what we saw this week. I mean, the ones that did fly, or there's ones that dip and run. There are ones that that just drop all day and then go on a day 2 run. And having watched, traded easily over 100 IPOs on the debut, and a lot of them have been these low float varieties, you just start to recognize these patterns. And I try to tell people what to look for ahead of time. But then when we're live trading these on YouTube, Ali Angel has joined me a few times. That's Trading Fit Girl on Twitter. She's been on this show a few times. She's great. So we live traded these, and we called this one out and got a lot of people in on a great opportunity to make money. This was the big one from last week. This was Austin Technology. They do like LED screens and OLED screens out of China. This was a clear stealth IPO setup. This one priced at $4 per share. It debuted at $11.10, and it just halted up. Halt. One halt down, but halted up to about 26. And I got out on, once I had doubled, I got an allocation of 50 shares, tiny. I added to that on the debut. And then I just said, look, 2 halts up in this market, and I can take profits after, with less than 45 minutes of trading. I think we had a 20 or 30 minute halt and then a 10-minute halt. I just took my profits and said, look, I doubled my money. I'm happy with that. I can kind of just let it watch from here. And the reason I want to point out the urgency of playing these safe, sure, you could have held all the way into, I'm not really going to mark that off, $56 early in pre-mark. There's like 400 shares traded right there. So you're not going to, we couldn't have all traded that amount. But there was a spike up here at the end of the day to 44, 43 something. On day 2, it did open up and run up above 45. I mean, so you're talking about a stock that many people bought bought at $4.
This is insane.
And 70, it was something like 70. Oh no, this was maybe 98,000 shares in the opening minute. So you can't go buy 20,000 shares and turn like, $200,000 into $1 million. That's gonna, if you add even like 10,000 shares, you're gonna bump that price up and kind of dilute the opportunity for everyone. But you could buy 1,000 or 2,000 shares and take $10, $20, $30,000 in one day, of trading. And I have caught those at that volume before. This one I'm a little bit pinched right now, so I played with everything that I could, and doubled my money. You could have tripled your money on this one, or even quadrupled it, even just buying on the debut. The giveaways on this one were that it was prime number capital. I heard from people who were in on the IPO with bigger volumes than Webull allocated, that a large portion of the shares got allocated to Asian shareholders, and it's just one of those IPOs that looked, smelled, talked, walked, like a duck, and turned out to be a duck. The thing I really want to emphasize here is, though, don't get greedy expecting these, because these have run on day 2 to like 70, 100. Look how fast this one fell on day 2. It went from 40 to under 4. It's the first time I've seen one of these do a round trip in 2 days, that's $4, 40 plus, and back to $4. So this is musical chairs. You can leave at any time you want with the chair, with a seat at the table, or you can be the one stuck upside down with nowhere to sit and no reprieve.
Louise, that's oh my gosh.
Okay, the next one was Tenon Medical, and this one I stayed away from partly because OST was, the same time, and I had less conviction in this one. The opening debut, it actually did halt up, but this didn't really look or feel like a stealth IPO. This was benchmark capital, had a really low volume of shares in the opening trade here. And you had a lot of people bought in at 5, and it just looked like this is what I call the halt of death, although it did kind of rally, is when it halts up. So you're stuck. You can't sell there even though you're up, and then opens way down. So if you got in at this at like 22.05, it halted like immediately up to 24. You can't even really get a limit order in time to sell on that. You try to get lucky, but it's almost impossible. What then happened is it opened, down at like 17 or something, 18, 1740. So at that point, you're dead. But you could have held on and gotten lucky. You're really just getting lucky at that point. Or if you understood what the setup was and you were brave enough to try to load up on the bottom here, that was the big play. There are people I was trading with that made that play. It's not a trade that I try to make. The next one was BioLite Bio, BLTE. And this was kind of a stealth copycat. They do have ties to Taiwan. There was a big allocation apparently made to the Taiwanese shareholders. And I did like the setup. It priced at $6 and debuted at $12.50. So we could see it looked pretty similar to the OST, price at 4, opened at 11.10. JCSE was the one a week before that ran. GNS was the week before that ran in a similar fashion. So price at 5, debuted at 12.50. That looked like a strong setup. But a huge difference was that instead of less than 100,000 shares on the initial volume, we had 250,000 shares. So we did get the halt up. We did then get the open, and I had my finger on the trigger to sell with the limit order rate if it didn't just insta halt.
Okay.
But I was trading on Webull, which I guess I hadn't. With E-Trade, if I do that, I click, make the trade, and then I get one confirmation screen. With Webull, I set in the order. It gave me a confirmation screen, and I hit. I was ready, and I hit that one in time. But then it made me confirm about 3 more times, and I first wasn't expecting it, and then by the time I got the third one in, it had already halted down again. I ended up getting out at exactly where I'd gotten in instead of taking a nice $3 win. So it's a little bit of a risky trade, to go. Each subsequent halt becomes riskier and riskier. But for me, it was just an execution problem as to why I didn't take a profit there. Yes, I could have held because it reversed way down. I could have held and I guess taken profit there. That's not the play I'm really looking for. That's very risky. It can just as easily fall down, maybe make it back just up to VWAP and fall, which is more, typically what we see. But my conviction in this setup was lower than OST, largely because OST had already done this. And when you have everybody buying in before the run, you see less of an upside. There's less demand after everybody's already bought in. And we see these setups, these repeatable setups get played out in all sorts of situations, whether it's the SPAC merger or the D-SPAC or the short squeeze. The original short squeeze was, the original is almost always better than the sequel. And by the time we get to the triquel, third one, the trilogy, once it becomes a trilogy, you're starting to get, lower and lower, results. And we've seen this in the low float IPOs that, do the day 2 runs, that after we haven't had an IPO for a while, we get a low float IPO that just kind of is a broken IPO. It just crashes hard, not a lot of volume. It goes from a $5 pricing, debuts at like $3.50 and drops down to $2. Then on day 2, it runs. And then the next time that happens, more people buy in on day 1 saying, oh, these always run on day 2. And by the third time, it's kind of played out and we don't get any run. So I think BioLite, first of all, it wasn't really a constrained float at the beginning. As we could see, it traded 250,000 shares on the opening print. And second of all, I just think too many people were already looking for the play. Once you have more people, you have people taking profit earlier, you have people getting in earlier, and it just kind of gets played out. So I think with all the low float IPOs that we have on the schedule for this week, we're going to see less opportunities. Yeah, and I think there's more that are going to be added during the week. If this market did sort of bottom in Friday with everybody getting margin calls and having to dump and sell, and this week buyers come back in, we're even going to get a mainstream IPO from a company that I'm sure most of the people watching this have heard of, which
I know Bausch Lomb.
Yeah, you've heard of these guys?
I use them. I use them when I
like in the chat if you if you actually use their products. We haven't had an IPO where people actually use the product, and we'll talk about it in a second. We're gonna fly through a couple of these. Austin Gold, I think we've talked about this like 5 or 6 times. It keeps getting rescheduled. It's a gold miner that doesn't have any operations going on. They're basically prospective. It's Roth Capital. Their IPOs don't generally do all that well. They've just been reducing the float, and trying to kick this over the finish line. And I just don't see it as a great IPO when it takes that long to get. And they still, might reschedule it again. Novastera, this is sort of interesting, but I don't think it's going to be great in this market. They do graphene products. So graphene is this like super light, strong material. It's used in medical devices and has a lot of industrial.
EVs right now too.
Exactly. And so there is an EV angle, which could make this interesting. I'll be watching it. It does have units though. Once units get involved, it's hard for these to run. These units can be exercised at, which is the general rule at one point, basically 25% premium to the IPO price. So if they price this at $5, not going to 6.25 at 6.25. There's a lot of warrants that'll start getting exercised and sold off. That kind of caps the run potential on these. It also can diminish the IPO price. If it prices at $5, you consider the warrants worth, say, a 25th of they tend to value them at around 70, 80 cents, something like that. So 420 would be sort of the break even for people who bought at 420, the share price plus 80 cents of the warrant. That's where the IPO buyers are at break even. So it's just one of these highly speculative plays that a year ago would have been super hot to play off the debut that recently have not been debut trades. But I'll be watching Twitter and social networks, Reddit, to see if people are talking about this. If there's a buzz around it, we had XPON was the last one that we really saw just run off pure social buzz. And this one will be interesting to see if people pick up on this one, but I don't have any picks this week that are very high conviction. I just will be more watching and taking notes. And if I see a debut setup that I like, then I may take a trade. It's also my daughter's 2nd birthday. She also started school today. We got Mother's Day coming up this weekend. So got a lot of other things to focus on, but I will be
congratulations.
getting the newsletter up. Thank you. She's super cute. 2 years old. They start them young here in Portugal. But yeah, she got a uniform and everything. It's cool. They have an app. They send us pictures throughout the day, tell us what their eating schedule is going to be. She seems to be very happy with it. Okay. So Edible Garden, we talked about last week. This is a controlled environmental agricultural company that grows herbs and lettuce indoors. They actually grew out of a failed cannabis growing company, and the majority of their revenue comes from just 2 customers. They do not have great financials. They did reschedule this from last week. They do not have positive baseline financials. The underwriter is Maxim Group. And I think they're pricing this at like $6 to $8 per share, which is a little bit high. I don't like to see these that have such a high downside potential. I'll be watching. I kind of expect this one to fall pretty hard. In which case, then you can look for a rebound, or if it does run a little bit, I'd just kind of be okay. Well, I was wrong, but it's not. I don't have any real conviction in this, even though it's food and like food prices are going up right now. PepGen, biotech, muscular dystrophy. I'm just going to say it again. I don't trade like normal biotech IPOs. Yeah. People just don't know about them. Once in a while, they go up a little bit. Last week, we had Halivax, which did okay. HLVX, I think it debuted at 17. Oh no, it priced at 17, debuted in the high 18s, went as high as like 21, but kind of trailed off from there. And that's not really the upside I'm looking for compared to like OST. Yeah, biotech, no thanks. Bausch Lomb. This one's worth talking about. It's the first, I would say, brand name IPO that we've had this year, where I would say that the average trader or non-trader knows what Bausch Lomb does. If they don't use their products themselves, they know other people that do. Mostly, their main business, they're established to create disposable contact lenses. And we know that, hold on, sorry. Gotta turn this off.
Tell me, Matthew, you're busy.
I'm busy. And I should just turn off Skype, but we'll see. I'll grab my phone in case he tries to call back. So there is like an aging population that is, using more and more corrective lens products. There's also a pandemic or endemic. I don't know how you refer to it. I've read that like children are having a lot of eye problems these days, and opticians are saying that it's related to, screen usage, that this generation is like attached to the screen in ways that none have,
that makes sense. I didn't see what you saw, but we just going off of like basic assumptions. That seems like a logical connection, right? Like screens are poison.
1 second, guys.
Wouldn't you presume, Aaron, that with kids,
I mean, yeah, that would be the biggest change, I would think. But I think there's yeah. I don't know. I also haven't seen that data that like more.
No,
kids
I haven't either.
now than in the past.
I'm just saying it makes sense, right? Logically.
I've also seen very conflicting data on blue light glasses.
Whether they work or not.
Yeah, like are effective at or that it matters that you're blocking out the blue light. Essentially that
my phone has a setting that's like that. Like my phone has a eye comfort shield that like tones out the blue light.
Okay, I never heard.
So
of that before.
They have faced some recent supply chain issues, but that's expected to kind of if you're long, on this company, and if you're long, I wouldn't buy the IPO debut. IPO debut trading is about hitting the the initial pump and the initial, for that trade, wait for 6 months and pick up on dips and pick up off, when the insiders can sell their shares off. We often see, especially for mainstream IPOs, which is a huge difference from the low float IPOs to the mainstream IPOs, is that once the lockup period expires on the mainstream IPOs, we actually see a lot of insiders sell and the price comes down a bit going into that LPX, or coming through the LPX. Whereas with the low float variety, we often see, because the floats can be so easily pumped, we see them get run up going into the LPX or slightly after the LPX, because that's what the companies can do to give the insiders the reward on having done the IPO in the first place. Bausch Lomb has, they're not growth number spectacular financials. They're just more like solid investment financials. Revenue's up 10% in a year. Gross profits up 7.7%. Gross margins in this company are very strong, and that's something that I've read that institutional investors are really starting to look at, given valuation crunches. Everyone's looking at, or now the new metric that seems to be kind of garnering a lot of attention is the gross margin, and they do have positive baseline financials. So actually, this company
so they make money. They make money is what you're saying.
It's a business that makes money. Yes.
All right. All right. The market likes that.
Yeah, and this is a mainstream underwriter. This is Morgan Stanley, so there's going to be allocations on E-Trade, and it's 35 million shares. I think they're going to lean on retail traders to actually buy this, and retail on E-Trade, you're really encouraged to hold for 30 days. So maybe that holds the float up a little bit. The price range is $21 to $24. I'd be surprised if they get high end, but I'll certainly be watching that. I think 22 is sort of a fair, place to get it. If they can't price it at that and they go below that, I would be interested in maybe taking a hold on this for a few day swing. It is a dual listing, which means they're listing it on the New York and the Toronto stock exchanges. But one thing that I don't really like about this is not an IPO to raise money for Bausch Lomb operations, expansion, product development, anything like this. This is just a spinoff from Bausch Health Companies, basically selling the company to the public.
Right.
And I always kind of wonder, they must think that now is the time when they can sell it for more value than they're getting out of it or will get out of it in the future. We haven't had enough of them to really gauge the performance of them. But I remember Vimeo has just been a disaster.
Well, that's been a dog.
And that's like, but it's like it's the only other real competitor to YouTube in the streaming video, but maybe that's not really a fair comparison. Maybe YouTube's more aptly compared to TikTok and Instagram. Chart.
Yeah.
Vimeo's been a nightmare.
Oh, so actually, but that's a good point that you make, though. It is worth noting that this is not an IPO to raise money. This is an IPO. This is a spin-off IPO.
You're basically giving your money to Bausch Health Companies, and they're giving you the company, like they're selling the company to the public.
Right. So interesting.
Yeah. One and the last point I want to make about any IPO that is household brand name recognized, there is a really good opportunity for a day two boost. So whatever it does on day one, but especially if it kind of crashes a little bit, people who are not traders of stocks, and I don't know how exciting this one will be, but this will show up in your average Dick and Jane's headlines feed for a company that IPO'd. Bausch Lomb's IPO soars 20% in the debut. That usually is a little bit misleading. That's like the IPO priced at 22 and started trading at 26. And then, came down from there, or, whatever it did from there. But there is a day two effect on these. And this is likely, although this is scheduled to go live on Friday, which is a little weird for a mainstream IPO. Maybe they bump it up to Thursday. But that gives it all weekend to kind of marinate in the headlines. And traders can come on Monday and be like, oh, Bausch Lomb, they're really huge. Contact lenses are going to be a big business. I use them. My grandma uses them. I'm going to buy some shares. So brand name companies, we do see this kind of day two pop effect. So if you're trying to debut trade this and you end up with a little bit of a bag, this is why I won't sell on day one, especially for mainstream IPOs. There's just a very good chance that especially early in the morning, not pre-market, but on the market open for this first, say, 5-10 minutes that we get a bit of a run. And we've seen this with a lot of brand name companies. So keep that in mind if you decide to try to day trade this on the first day. I think this is the last new one, the last one we've already covered. This is YTech. This is some kind of 5G related company. They do network deployment technology for small cell systems. So we're talking about pretty small coverage areas. They're selling their solutions to existing cable companies, or like kind of aging companies, to update their their services with cellular and mobile. This has warrants. Revenue is terrible, down 11% in the 9 months ending September 30th. Gross profit down 26%. Negative baseline financials. Underwriters EF Hutton. Sometimes they're so bad that you go, maybe they're like really only going to float. Maybe they're saying the float's 3.89 million units, but they're giving all of it to insiders who aren't selling. I don't know. It's just so bad that I won't touch it unless it somehow looks like it's something manipulated. But this one is pretty bad. It's not even a super low float, so I'm going to stay away from this one.
Wow, that's
how
SOS hype.
It's not even.
Yeah.
That's how you know.
Yeah. This one has been on since April 22nd. They've kept rescheduling it. I didn't bother updating the date. It's more for reference here. It's scheduled for Friday. SOS Hydration. This is a hydration. It's like a sports drink based on the WHO's rehydration formula. They're doing units, one share, one warrant. their numbers aren't terrible. I mean, we expect having negative baseline financials doesn't mean that these are growth companies. They're sort of supposed to keep raising money to fund growth. Revenue and gross profit are not bad looking, and they have some interesting, they're out there. They're in the stores. They're in CVS. They're in, they have sales channels. You can see this product. The Underwriters Maxim Group, though, and it's just when you see it, this one's been rescheduled 2 or 3 times now. So when I see that, I'm kind of like, I'm not super excited about this. I don't think that people are just going to be like, oh, yeah, they're finally going live. I'm going to go, I'm all in on this one. So if I had to pick one of these to maybe be interesting, I might be going for the graphene play based on the EV angle and the the float being pretty low. But even then, with a warrant, I'll be watching from the sidelines most of these, maybe scraping some if they just completely bomb on day one and just keep falling all day and the volume isn't very high. That's where you sometimes see these day 2 pops, and that's the kind of play I'll be looking for this week. I'm not sure I'll be able to live stream. I'll try to do one on Friday. So if you follow me on Twitter, I'll release the links for that. Sign up on IPOwarriors.com to get the newsletter. And thanks, guys. That's what I got.
All right, Matt. Plenty of activity today, this week. Matt Hammond. Always a pleasure, man. Have a great rest of your week.
Yeah. You too, guys.
All right.
Cheers. Bye-bye.
All right. There's a few other things I want to hit on real fast, and then we're going to get Jake Wujastyk on. I was reminded over the weekend. It was fun when you remember that a company's public. You forgot that they IPO'd or SPAC'd or whatever. You guys remember Metro Mile? Remember that was one of the Chamath SPACs? I totally forgot that stock was public. I remember following Metro Mile a few years ago before they IPO'd. MILE is the ticker. It's been a utter train wreck. I totally forgot that this company was a stock that you could buy. It's down. It was under $1. Here, I'll bring up the chart. Where's my chart? There it is. I was just it was like a blast from the past. Remember, I just forgot all about this stock. Anyway, this thing got, how high did it get? It got to $20, and today it's at $1. Man, investing is hard. By the way, you know what I did over the weekend, guys? I did something that you're not supposed to do. I went and logged into my 401k account, and I only did so because I had to look up something. And man, I should not have done that because if you guys want to know, my performance year to date in my 401k, not that it matters, it doesn't matter, but I'm down 21% this year. I lost 21%. Oh man. Oh, it sucks so bad. Anyway, I hope you haven't logged into any of that stuff, Aaron, and checked, because
I have what?
I haven't logged into any of your retirement accounts and looked, because
I have. I mean,
man,
I checked, but I know it's whatever.
So not good. All right. Anyway, hey, how are we doing in
Crypto world?
Crypto world? Does anyone know?
I don't.
All right. I don't know. I don't know either. Let's pull up the heat map and take a look. All right. I guess it could be worse, right?
Holding up.
Although it's notable that the green isn't super dark green, but the red is pretty dark red, right? So, yeah, I don't know, guys. I know Warren and Charlie Munger hate crypto, and everyone was all up in arms about that. I still think if you probably, it's a good idea for everyone to have, at the very least, a little bit of crypto, because you just don't know. I've been buying Bitcoin and Ethereum, and I own a little bit of Solana as well. Maybe I should buy more. Down 5% today, but my Bitcoin investment, and that's what they are. They're investments. They're not trades. I've never traded I've never sold any crypto in my life. I've only ever bought.
Wow.
Have you
sold?
Yeah.
Oh yeah.
Oh, I haven't. I only bought Bitcoin for the first time last year.
Really?
So yeah. So, I don't know. I'm just gonna I'm just gonna close my eyes and keep buying, and that's that.
Okay.
But
I like that.
Jay Rice says it's a. Oh yeah, Jay, that's true. Anyway, yeah, I'm just gonna keep buying.
Wait, you can double contribution to your.
No, he was talking about like increasing the rate of contributions. Like it's up to you. For 401k, I think the max this year, they change it every year, but the max is 20,500, I believe. So he was just saying just buy more faster, right? Is what he was saying. Which, you know, there's only so much to go around, Jay. I gotta eat, man. But anyway, as I was saying, if you want some free Bitcoin, all you got to do is go to the Voyager app if you haven't already. Download Voyager, create an account using the code ZING when you sign up, ZING. Fund your account with $100, make a trade, and they will send you $50 worth of Bitcoin right there in your account. Second thing I wanted to do before we get Jake on is I wanted to look at the earnings calendar for the week because it is a doozy. Let's bring it up on the screen. There it is. Look at that. Tonight, Expedia, Mosaic, which is a stock we care about now because it's fertilizer, right? Avis, MGM, Clorox, Chegg has come off. NXP Semis, Logitech, Zoom Info. And that's just the appetizer. Because look at tomorrow morning. Biogen, Pfizer. Oh, that Paramount report's going to be huge in the wake of Netflix, right? Scott's Miracle-Gro. Tomorrow night, AMD, Starbucks, Airbnb. Okay, dude, it's quick survey time. We will be streaming earnings reports at the close. Sorry, after the close this week. Not tonight, but like Tuesday, Wednesday, maybe Thursday. Who do you want to see? Okay, AMD we're going to stream. We're doing AMD for sure on Tuesday. We probably don't want to do more than like one or two a day. So does anyone have a preference for what we should stream Wednesday and Thursday after the close? Well, Thursday I can't speak to because I won't be here. But what about Wednesday? eBay, Twilio, Uber, none of the above? Does anyone have a preference as to what call you want us to stream? BP? We can't stream any morning calls, GL, just because we are preoccupied with our shows that are live right then and there. When is Wayfair? Sorry, I'm not looking. I helped make this graphic and I don't remember when anything is. Wayfair is Thursday morning. Again, can't really do the morning stuff. Airbnb. I think we did that last quarter. We could probably do
Airbnb. Could be a sneaky beat.
I'm thinking we stream Airbnb as well. Uber. I'm seeing a lot of Ubers and Block. We can do Uber. Wingstop. I know. Do you want to do Wingstop? Is Wingstop that interesting?
Wingstop's not that interesting.
It's not that interesting.
To me. To some people, it might
Maybe
be.
It is. Maybe. I guess if you own it, but it's also in the morning, which we can't do. So, yeah. All right. So here's what we'll do. Tomorrow, we'll do AMD and Airbnb. Okay. Wednesday, we'll do Uber. Thursday, somebody. Well, you're out Thursday?
No.
You're not. Thursday. Okay. I'm out Thursday.
This Thursday?
And Friday.
This Thursday and Friday?
Yes.
Really?
Yes.
All right.
I have a wedding.
Okay.
Not mine.
Congrats.
Yeah, no, not mine.
Okay.
Saw Fortinet. When's Fortinet? I don't even know. Oh, they're Wednesday. I don't want to do Fortinet.
It's boring.
Fortinet, come on. That's not sexy.
You know what they're going to say? They're going to say, hey, war is good for cybersecurity. I don't know what they're going to say.
Yeah, I don't know. But how about that? Wait, I'm looking at Tuesday morning. Paramount. That's going to be a big one, isn't it? That's going to be a doozy. How is Paramount Plus doing?
I think there's value in Paramount.
I've never even been on Paramount Plus. What do they have? I don't even know.
I mean, I think there's value in Paramount. Dividends nice, 3.3%.
Maybe. Hey, you know who I saw announced a deal today is Qualcomm.
Really?
If you guys missed it, we had the CFO of Qualcomm.
We didn't get the inside scoop
on Friday. No, we didn't. On Friday's show, we talked to Akash. It was a great conversation. Would highly recommend you all check that out. Oh, they have Halo. That's true. How could I forget that? They advertise it everywhere. Good point.
Speaking of.
Yeah. Of what?
Speaking of earnings.
Yeah.
Coinbase. I've been watching Coinbase. Coinbase doesn't report this week, but they report May 10th, I believe.
Oh, interesting.
Yeah. Coinbase actually having a good day today relative to the crypto markets, up 6%. Is this one of those rips we should sell?
Haven't been able to say that. When is the last time? Let me pull up a Coinbase chart, and then we'll get Jake on here.
Yeah, we'll talk to Jake about the charts as well. We've also been having kind of a...
When is the last time Coinbase had a really good day?
Man, the markets just do not know what they want to do today. Qs are now down 0.4%, down below that 312 level. I don't know. I think we're just going to see...
Clearly, I think what you have is like some very clear digestion from Friday, because Friday was so one-sided. It was like
this
Coinbase
to me
chart.
is a pop to sell on Coinbase. I don't think
frankly, it's probably a pop to sell everywhere. Wouldn't you think?
Is there a pop everywhere though?
Well, I mean, I guess the SPY is red now.
Yeah.
But all right, never mind. What about the Qs? Qs are green, right? No, they were green last I checked.
No, man.
They were green last I checked.
Man.
All right. They're not green now.
Not in this market environment.
All right.
Nothing stays green.
Nothing stays green. Nothing stays green. Let's get Jake Wujastyk on and see if he has anything that's up for us today on his Trend Spotter chart. What up, Jake? How are we doing?
What up? How's it going?
It's going. I don't know, man. I would like your thoughts on this market.
Well, before we get to the market, because
Yeah.
we know that's all red.
Oh yeah. Okay, before that.
How was your weekend, Jake?
It was good. It was very good.
All right. See, when the market's like this, you gotta focus on other things sometimes a little bit.
I feel like Jake. I feel like you're a big like outdoorsy guy.
Sometimes. I mean, I didn't get to go boarding as much as I'd like to this year, but it's kind of been really windy in Denver, so that's been kind of detrimental to doing anything too much outside. It's just been brutal. So
Fair enough.
Yeah, so hopefully the wind calms down this this summer, but it's been kind of windy. But yeah, the markets, I think a lot of the stuff we talked about last week are still in kind of in motion, still applied to today. A lot of gaps that are kind of starting to be somewhat filled. We just filled on the S&P 500. We just filled the gap from May 21st of last year. So that was filled on Friday. And now we're potentially going to fill this gap down around 400 pretty quickly. So I think a lot of people, I think everybody was watching this previous low from February 24th. And when we finally broke down through that, I think you had some people stop out and some people, tried to buy that undercut. But at this point, we're just kind of tanking. So I would kind of continue looking at that $400 gap below.
Yeah, to me, like looking at the charts right now, is that they look the same across the board. Just like the past couple weeks have just been brutal and kind of blowing past some previous support levels, and that really leaves us looking at the support levels below the ones that we just went through and saying, okay, are we going to catch here and bounce, or is this going to be another one we're going to blow through? And I guess there's only really one way to find out, and that's just by setting those kind of levels, alerts, and watching them.
Yeah, I think once we broke down through this previous low from the 24th, a lot of people, it just becomes a self-fulfilling prophecy. So I think a lot of people maybe thought there was a W bottom maybe coming, and we're just blowing right through it. So big earnings week as well. So I think that's gonna maybe be the catalyst for further continuation down. I know last week we had talked about kind of the big earnings that were coming out, Microsoft and all of those. And, you know, Microsoft actually had a decent move up after earnings, and still green. But, you know, I think if these names start to go red, that's when the market's really going to really start to turn, especially on the Q side. I think you mentioned the Qs were down like 0.4% or something. So the S&P 500 is actually down more today. And I don't know if we had this descending triangle last week, but we are starting to break down through these lows. You did have Friday. You had a couple times last week where you broke down through these previous lows from February and early March. So the Qs were definitely leading, and now they're kind of. I think the S&P 500 is almost just catching up with the Qs from last week at this point. So if you wanted to kind of look at gaps below on this one as levels to watch, you don't have as many here. So you do have one at 277. That's your next one to watch. So on the S&P 500, it's around 400. On the Qs, it's around 277. And this is kind of one of my favorite tools on TrendSpider, especially in this type of market where you're looking at levels where the market's probably going to just gravitate towards, which in this case are really gaps in price. So this gap down here from November of 2020, this gap up would be the level to watch below. Now I don't anticipate 277 to come tomorrow or the next day, but that would be your next kind of main level. And I think a lot of people are just trying to figure out which gaps are next below. And this one definitely has a gap a little lower than what we have on the S&P 500. So I think 8 points or so on the SPY. This would be like 30 points or more, or 40 points or more on the Qs to fill that gap. So we'll just have to see what happens. But the fact that we did break down through these previous lows is definitely not incredibly bullish. I don't think. And then with the monthly chart closing last week, not what I'd call an incredibly strong monthly candle here. So we'll just have to see what happens. Selling may go away is what what a lot of people have been saying on social media, especially Twitter. So we'll see if that's the case. But all in all, that is a really ugly monthly candle. So even if you're day trading, you still got to know kind of what those larger time frames look like. And just to get an idea, are we breaking down through key levels? Especially if you're day trading, if you're breaking down through a previous monthly low or a previous area on a longer term time frame, it becomes that much more important. So all in all, I think earnings are really what's going to move the market. This week, and the Fed. You have the Fed. That's not going to help anything either. I don't think. We'll see what they say, but. I think they're just trapped at this point. I think a lot of people know that.
Yeah. I mean, it's just been. I don't even know how to describe how bad the last kind of week, 2 weeks have been. Robert in the chat saying he's already shorted coin twice today. Have you been kind of going short any names, Jake? Or are you just waiting for these bounces to potentially buy back in?
I really haven't been incredibly involved in the market recently. So, I mean, I have no edge right now, really. I mean, you could go short, but for me, I think I mentioned to you guys, I've kind of started a new program at TrendSpider. So my day to day is not as much looking at the market and trading it as it was, a few months ago. So, looking from afar, I kind of prefer not to be in the market because I can kind of just post exactly what I'm seeing without any type of bias. And I think what happens on Twitter a lot of the time, you see a lot of people just incredibly biased based on what their position is. And sometimes it's hard to kind of see, both sides of the picture if you're actively in the market. So right now for me, it's clearly just a brutal chart here. IWM, you have this perfect bear flag breakdown. You're breaking down to new lows today from Friday. So to go long anything, I just wouldn't really even look at going long anything. I have some BLNK still, but that's really the only thing I have. And I'm just holding common shares of that. And that's kind of all I've been holding. And that's more of just like a longer term swing position. And this thing's so volatile. I mean, you can have a 20, 30% drawdown on this thing and be back up in the green within, 4 or 5 days if the market really moves up. The problem with BLNK is I think it's pretty tied to Tesla, just because, it's EV sector. This one's more on the charging side of things. But other than that, I'm just kind of observing and watching and kind of seeing how low we're going to go. This is Tesla. Pretty much a perfect breakdown here. You've got this support, you've got the breakdown, you've got the retest, and now we're trying to figure out if we're gonna continue down. But I mean, if we break this 822 low, I think this is probably going to hit some new lows for this week pretty easily. Maybe even these lows that we saw back in March and even in February. I just don't think there's a lot of money moving into the market. You've got a lot of people that tried to buy the dip, and now you've got a lot of supply above. So yeah, it's just not looking ideal for any type of long position anywhere, really.
Yeah, I mean, Tesla especially been weak. Do you have any other individual names you've been watching, or shall we take some from the chat? You let me know.
No, let's take some from the chat. I mean, like you said before, all the charts look very similar. I mean, you have a few that are kind of in their own little world right now, but most of the charts are looking pretty similar. I mean, Tesla, a lot of the time can be a pretty good proxy for the market. If Tesla's taking a huge dump, then the market's probably not up a ton. So yeah, the fact that our kind of proxy for the market being Tesla, at least a lot of the time, that's not looking strong. You got a SR flip, previous support becoming resistance. I just really can't see the bull case unless you break above this area here. So it wouldn't even shock me if we got a retest of this previous support once again, suck more people in, and then all those people that bought into early kind of sell into that strength. So yeah, let's take some requests and kind of look. And I have to leave around 11 or 11:25 my time, which is around 1:25 Eastern today. So
yeah, sounds good. Gives us about 10 minutes. First one I saw was ABBV, AbbVie.
AbbVie. Does this one just have earnings? I'm assuming. Yeah. Yeah, I mean, this thing was actually leading pretty well up until about mid-ish April, and
it was at its 52-week highs at that peak. Had been doing pretty well. Yeah,
and I think we were talking about that last time. I think we were talking about the 1.618 extension, and then we moved down. If you look at kind of just this longer term trend, it really depends on. So like on this, right? Like your lows from COVID are like 69 and your highs up here like 170. So generally you'd want to turn on a log scale chart for this when you have that big of a range within a chart you're looking at. So like I would probably use the log scale on this just to draw the trend support, but it looks actually pretty similar on the linear scale. But kind of here's your main trend zone to watch. And notice here, when I connected this, I just simply connected this start here, this wick to this wick, and expanded it. Now, if I use a zone, I can move this higher. And what I'm doing is I'm going to capture this wick right here. I'm going to capture this price action right here. So this zone area is a lot stronger than just that single trend line. So for me, I mean, this thing could continue down all the way down to the 130s or lower based on where this trend zone is. But I mean, it's Monday. The weekly candle looks decent, but it's Monday, right? And the day's not even over yet. So you can't even really look at the weekly chart as a function of the candle, but you can still look at the weekly chart and see, okay, can we go lower? On the daily chart, you've got the gap above. That's just your earnings gap. And you can see that here, it'd fill right around like 154.50 or so. But yeah, decent daily candle forming here. I just don't know much about this company, to be honest.
Jake, I get a random question for you. Rather than just like give you more tickers, I would just be curious. We haven't asked you this for a while. Can you maybe run through like one of your favorite features or like or functions of TrendSpider and how you use it?
Yeah, sure. Well, I mean, the gap detection, it's called the gap snake on TrendSpider. It's an indicator here. You just go into the indicator list and just type in gap snake. And then when you pull it up, you've got your gap factor, your opacity. That's just kind of more or less the characteristics of the gap. So like if I make this all the way to the right, it's just going to be a really dark area. And if I move it all the way to the left, it's going to be really transparent. So these are mostly just kind of focusing on what the gap snake looks like. The gap factor is actually capturing the size of the gap. So if we did like a gap factor of 1, you'll see here that this gap right here is showing by itself. So let me change this opacity to a little darker. And you guys can see it kind of fills there. So with a gap factor of 1, I'm just finding this gap up here. And the nice thing is if you're a gap trader, you're trading a gap fill or just the gap starting to fill, you can create an alert on this or this part of the gap. So instead of having to watch it all day, you can just right click on the bottom of this gap, create an alert, and whenever the gap starts to fill, so you would use this trigger here, breakthrough, whenever the price breaks through this lower gap on, in this case, the 10-minute chart, you would get an alert. So it really helps you kind of not have to be at the screen all day. A lot of people are staring at their screen all day. Oh, is the gap about to fill? Well, I mean, if you like to stare at your screen all day, that's cool. But some people have other things to do. Some people don't want to stare at the screen all day. So being able to create this gap snake and then just put an alert on the bottom or the top allows you to just let the system watch this gap for you, so you don't have to.
That's smart. That's smart.
And then some people may want to short this once it fills the gap above, and you just same thing, right click on the top of the gap, and then you'll be alerted anytime the gap pretty much fills on the upside.
That's nice.
So if you want some margin of error, you can use what's called sensitivity. So when I right click this, you can change the sensitivity button here, so you can move it right or left. And so if this will move over, I can get it to move over, it will create this zone for you to be alerted at. So here, I can't use an arrow, but you can see that this area gets bigger and smaller as I move this over. So, if you were someone that wanted to know maybe when it's going to fill within 50 cents or $1 of the gap, you could use this sensitivity here. And in that case, you'd want to use the touch trigger. So whenever the price touches anywhere within that purple area, you would get the alert, and you'd do whatever your strategy tells you to after that. So I'd say this is what I'm going to be talking about in Vegas as well, actually, because there are a lot of inefficiencies in technical analysis. I remember back in the day, when I was using just basic charting software, I would literally have to go and highlight these gaps manually. And a lot of the time, sometimes these gaps are so small, you can't even really see them. So sometimes you'll end up missing a gap. So I like the fact that you can just turn on this gap snake, is what it's called. And the reason why it's called a gap snake is if you go here and you change this to, let's say, 0.1, you're going to find some really small gaps, and you'll see how it kind of makes this little snake, right? So it's got this gap it's highlighting here, and then it's connecting it to this gap here, and then this gap is connecting to this gap. I personally like to just look for like here, right? Like if I'm looking for a bigger gap, I don't need to highlight this gap. I may not even need to highlight this gap. So then I would just change this gap factor, which is just looking at the size of the gap, to 1, and now I just have this one gap that I'm watching. So the whole point of TrendSpider is to optimize all of these inefficiencies in the market. So, not having to stare at your screen all day, using these alerts, identifying gaps without having to go through, looking at seasonality without having to go through and count every candle over the last 5 years when it's May and
yeah.
So, and I actually used to do that. So it was a huge time crunch to have to do that in any amount of time. So, but this is definitely one of my favorites, especially in this market when you've got all of these gaps. I think we were talking about Google last time, right? And I don't know if they fully filled the gap. They didn't fully fill the gap, but that was one that we had been talking about last Monday. So it's just a nice tool to be able to quickly do whatever manual analysis you want. But I mean, another one I like is the raindrop. But
I love the raindrops, man.
With the raindrop, you really have to use them around breakout or breakdown zones. So one thing that I definitely look for on, like a day like this, Google's green. So you already have this green raindrop, but a raindrop is a volume weighted candle. So if you're familiar with just a regular bar candle or a bar chart, the left bar is your open, the right bar is your close, and then the lines around this range are the volume profile of that candle. So like on a day like today, maybe you start looking to see, okay, is there a green raindrop versus a red close? That's something I like to look at a lot. Is there a discrepancy between what something closed at versus what the raindrop is showing? So if you've got a green raindrop but a red candle, I like to use that as a type of divergence because, for me, the volume weighted candle holds more weight than just an open and close. A lot of the time, open and close can be very arbitrary. But from a like breakout or breakdown perspective, I do like to use these to see, is there volume backing a breakout? Here's an example right here that I can kind of just see on Google. And this isn't a perfect one. I mean, there's only 2 points on this trend line, but this is kind of how you want to use them, right? Right here, this whole candle tells you where the volume profile is. Well, you can see here that there's not a lot of volume profile when the price tried to break out here. So we knew that there wasn't a lot of conviction by buyers willing to buy up any of that supply being dumped on the market on this breakout. So same thing here, right? Even the next day, you had a little bit of volume up here, but not a lot. You really want to see kind of a big bulge of volume at the top. And then one thing that's kind of crucial is the left side is the first half of the day, the right side is the second half of the day. So you can see here, during the second half of this candle on 420, you had no volume during the second half of the day up here. So you really didn't have conviction by buyers there to keep the price up. And so I like to use them around these breakout and these breakdown zones. And same thing here, right? You can use it the opposite way too. So here's an example on the downside, right? You've got this general area. You've got 1, 2, 3 different times the price held this area, 4 actually. And then finally, when you break down, notice a lot of that volume was actually below the support zone. So you can really see, was there a lot of volume that took place during this breakdown? And if there is, that's generally a good sign that you're going to have continuation. So here you broke down a lot of volume below that horizontal level, and then you've continued down for the last 4 or 5 days after that. So that's really how you can use them.
Yeah, I love that, man. I love the raindrop tool. It's a great visualization of volume and where it is. Just fantastic. So this is just a small teaser of what Jake will be talking about next week at the FinTwit conference in Vegas. Jake Wujastyk, co-founder of TrendSpider. If you guys want to check out TrendSpider, trendspider.com, use the code BZ25, BZ25 to get 25% off.
Did you guys get your tickets yet?
Do we what?
Did you guys get your airline tickets yet?
Dude, don't even ask about that, man. Aaron, do we have any idea?
I think you're booked, Spencer.
I don't think I booked.
I don't know.
I don't think I booked.
Not you. I think we might have.
I don't think. I think as of Friday.
What happened to Vegas?
Nothing was booked.
What happened to Vegas plane tickets being cheap?
No.
That used to be a thing. Like they wanted to get you out there just so you would lose money in the casino. So like the tickets were.
Who's they? The airlines?
I used to be able to get tickets
$750 Aaronson round trip.
From Denver, I could get tickets usually for like $180 to $250. and now I think we paid almost 600 for ours. So yeah, it's absolutely insane.
God, insanity. All right.
And that was like,
well,
so.
either I'm on a flight or I'm not. It's one or the other.
We will see.
We will find out. It'll be a mystery. Jake Wujastyk from TrendSpotter. Jake, we'll talk to you again next Monday. Have a good one.
See you guys.
All right. 125 here. And we're going to have our last guest today, Shawn Cruz, on in 5 or so minutes. Just get his thoughts on it's a big week for macro, by the way. Aaron, we didn't even talk about that. Huge week.
FOMC.
We have a Fed meeting, starts tomorrow, but ends Wednesday. We'll get the announcement of a rate hike on Wednesday. The actual, like, whether or not we're getting a rate hike is not in question. We are getting a rate hike. The market is saying, the market's pricing a 99% chance of a half-point rate hike. So half point, the various Fed speakers have already kind of shown their cards. Rate hike is happening this Wednesday. That's not up for debate. What is up for debate is how far beyond that does the Fed need to go? The market, you would think, based on what the market is doing, that the Fed has already raised rates like to 2%, but we're at 0.25% right now. 1/4 to 1/2 is the current range. And how high do we need to go to get inflation under control? That's the question. We're going to have the Fed on Wednesday. We're going to have a jobs number on Friday. And then next Wednesday is CPI, aka inflation, aka the only thing that matters to anybody right now. So huge week.
We'll see. I mean, I guess the good news is everyone's already priced in, like, not the worst, but very bad, I feel like.
Yeah,
So it leaves us, I feel like it leaves us in a good position for a sneaky surprise. Like if CPI comes in lower than expected.
Like sneaky, like Mr. Deeds.
Right.
But if it is sneaky.
Exactly.
All right.
Austin's asking where's Hot Stocks Luke at. He'll be back on Thursday.
Yeah, Hot Stocks
he'll also be on live on Benzinga tonight with Ruel. Talking some crypto stocks, you name it. 7 p.m. Eastern, so tune in for that.
Yo, I'm just gonna throw this out there. Next time we have like a major global military war type thing, can someone just remind me to buy the US dollar? Just go along the dollar.
Sure.
Can you just remind me next time we get like World War III?
All right.
Or
next
like
time we have World War III.
World War IV.
Okay.
I don't know when that's gonna be, but whenever it is, remind me to. I might be old, but just remind me to buy US dollar. Okay. The dollar is at a 20-year high right now. Insanity.
There's not really a good way to, I guess you could buy like UUP.
Go UUP. You can do the US dollar index futures.
I was actually talking about UUP a while ago, and people thought I was crazy for saying I was long the dollar when everyone was talking about inflation and everything.
No, I don't think you're crazy. Look at this. Let's go to a monthly on the UUP. Oh boy.
You know,
oh boy.
I'm gonna do the thing where I search in my messages UUP and see where I.
All right, I don't know what. Wait, what is that? Oh, that's. Wait, that was COVID. I was like, what is that? Oh, wait, look at that crazy monthly candle. Look at that, March 2020. Look at that thing. All right, let's get Shawn Cruz on the show here from TD Ameritrade, and maybe he can bring some sanity to this show.
Let's get Shawn on.
Or maybe not. Shawn is their head trading strategist. Let's get him on the show right now and get his take on the chaos of last week. Yo, Shawn Cruz, what's going on, man?
Hey, what's going on, Spencer? How's the Monday starting off for you? Hope you're a little better than the markets in general.
Yeah, I mean, I'm having a great day. Just personally, I'm having a really good day. I mean, I overslept, so I got 20 minutes of extra sleep, which is always fantastic. But no, I'm good. I'm good. I hope you're good. Markets are okay, right? Markets are digesting.
Could be better.
They're digesting, right? Fair to say. Just what was your take on just the puke into the close on Friday?
Yeah, and so after we had that, in the close on Friday, there was maybe it's end of month, maybe it's this, maybe it's that, maybe it's everyone's just finally digesting a lot of the tech news we got last week. But then we just started looking forward to how we were going to open this week, and not just this morning, what we call the cash open, which is just traditional market hours. But a lot of people are looking at futures and how futures are going to open, and they actually were pretty solid to start. And I don't think many people expected that to hold. It was a little bit of a tug of war where it looked like we were going to try and get some positive action today, but it looks like, that's fallen apart. But I would point out, you're going to see some weird swings going into this Fed meeting. I know 0.5% is what's priced in, but I think the market is not nearly as certain about what the Fed's going to do as maybe looking at what the Fed fund futures or anything are pricing in at the moment. And we just got a lot of economic data to get through this week, not just in the U.S., but I mean, look at some of the PMI numbers that are coming out globally, especially from China. We were in 50s here, which 50s, anything north of 50 is considered we're still in expansion to some degree or another. The breadth's not great, but we're still in expansion. Anything below that is where you're seeing contraction or just sort of stagnation. China's in the mid to lower 40s for a lot of their PMI data that we got out. So that global slowdown, I think people are starting to wonder how the U.S. can outrun that and outlast that against a Fed that is expected to be pretty aggressive in tightening, at least for the time being.
Yeah, it's telling. So like this morning, I mentioned that I overslept, so I get in a little bit late, and I had a message from the guy that runs our trading school, and he was having some problems getting onto the platform. He asked if I could help him, and I was like, yes. And he said, Spencer, this is ridiculous. I need to be able to log in right now. The market is crashing, and I need to be able to log in. And I was like, wait a minute, is it crashing like again, like this morning, like right now? But it turns out he was referring to Friday. But the fact that I didn't know what he was referring to, I was like, shoot, like, are we down to get like another 100 handles overnight that I'm not aware of? But we weren't. Turns out, thank goodness. But
yeah,
but you're right.
I think if you want to see somewhere where there's just a lot of I'd say demand destruction more or less going on. Look at some of the commodities. Look at gold. Is down 2.5% today. Crude oil getting hit pretty hard because those China lockdowns don't look like they're going anywhere. I mean, the headline says case count improving, which is nice, but case count going from 40 to 30, that's improving. But when your target is 0, it's not nearly improving enough. And it looks like some areas in China are going to get additional lockdowns put in place. But if you look at commodities now, getting hit pretty hard. And then also bonds look like they're pricing in that expected Fed hike, and it's not going to make things cheaper across the board. And I know you talked about CPI next week, and everyone likes to focus on core. We focus on core just because some other areas, food and energy, can be volatile. This isn't really, a volatile reading. I think the volatility they mean is it's up a lot one month, down a lot the next, so on and so forth. There's more choppiness, not it's skyrocketing out of control. So you can't really ignore you can't focus on core and say we're going to ignore food and energy when you think about gas. Chicago the other day, gas was $5.28 a gallon. It's getting
$5.28. I paid $4.30 last week.
National average is $4.19 right now.
Holy moly! Shawn, what do you make of the idea? I was thinking about this morning. I was like, well, like if inflation goes down and the market just keeps on dropping, it's like you're getting doubly screwed, right? Because inflation's coming back down, finally, but also the market can't catch a bid to save its life, right? So that would seem like, based on what's happened recently, it's like that would punish the most people. So why shouldn't we get that, right? I mean, it would just be doubly painful.
To me, that's recession. I mean, if you're seeing the market come down and inflation come down alongside of it, it's because the market is pricing in a recession. So in a recession, you're not going to get a lot of growth. You're certainly not going to get the kind of growth that can justify some of the high multiples we've seen out of this market. But you're going to see the commodity prices come down because it's just demand destruction. And I mean, that's kind of supply and demand can work two ways when you get prices moving higher. They can sort of get those prices down to a more equilibrium, something the market can bear in the long run. There's two ways to do that. Either supply increases to meet that demand, or the demand side takes care of it by just starting to chop off demand. People stop going out there making purchases or whatever. We're not seeing that yet. New orders are still by and large staying pretty solid in some of the data we're getting. But there's some other areas, employment in particular, where I think you're starting to see some problems showing up. So the JOLTS reports and the employment report on Friday are going to be sort of two big reports on either side of what I would say the peak is going to be that Fed announcement on Wednesday.
All right. So much uncertainty. Is there anything that you are relatively certain about right now?
I mean, I think one thing is where people are going to try and find some of that certainty in markets. They're looking at some of those lower volatility areas. And they're looking at the traditional defensive sectors, staples, utility. Real estate is an interesting one. And I would point out, when we talk about real estate, we're not talking about home builders. If you look in the real estate sector of the S&P 500, a lot of those companies are tied to, things like American Tower Corporation, cell phone towers. There's one in there that's tied to data centers, shipping, logistics. There's not as much exposure in that real estate sector as, one of us going out there and buying a new house. When they're talking about real estate, it's not even sort of that, the malls or anything. There's a lot of other areas of the real estate market that are included. But those are the areas I think when people are looking for, I don't know if it's certainty, but less uncertainty, they're trying to find some of those lower volatility areas, which are the traditional defensive sectors.
Yeah. Shawn Cruz is the head trading strategist at TD Ameritrade. Shawn, great, pleasure to talk as always. And next time we speak, maybe we'll have a bit of a different picture here because between now and then we'll have a Fed meeting and a new inflation, a jobs number. So
certainly,
I guess it's probably a good time to be you because it's never been less uncertain. Maybe not never, but it certainly hasn't been this uncertain from a macro standpoint, with the exception of COVID, in really quite some time. So
it is. It's been a lot of volatility and where trading is going on in and out of different asset classes. I mean, the options volumes have across the board for the industry. If you're looking with the OCC reporting, they were sort of starting to dip down a little bit, and we're seeing a little bit of spike once again. Just the overall volume levels of the past week.
Yeah.
So
I'm glad you mentioned that. If I can ask about that real fast, like what is TD Ameritrade seeing on that front?
I mean,
in terms of activity.
I mean, we always see whenever we get these types of environments where clients, you're going to have a piece of the client base that's going to be a little bit more speculative, going out there and trying to take maybe a little bit of a contrarian take. But then we have a lot of clients, and what we saw, in March, quite often was sort of this rotation type strategy where they were rotating out of what was working and using that to maybe buy what was getting beat up. I don't think we've seen that quite yet, just because you're not seeing the market be able to catch bids at any given price level. But we're putting out the IMX next Monday. We can talk about the IMX, which is the retail sentiment report. We get a look at what they were, getting exposure into at a macro and also at an individual name level. So we'll have that to look forward to next Monday. But we're seeing, volumes remain steady. But as volatility picks up, it's interesting. You do see just at the industry level, the options volume peak as there's a little bit more of an opportunistic trading strategy, especially when VIX is up this high. You see a lot of premium sellers coming into the market and taking advantage of those elevated premiums.
All right, Shawn Cruz, TD Ameritrade. Thanks a lot, Shawn.
Thanks.
All right. Hey, you know what? It's not a good time to be doing, probably, if you're a corporation.
It's
It's not a great time to be buying another corporation.
probably not.
Not
Well,
a
I
good
don't know.
time.
Maybe some valuations have taken a hit.
Look at what they're doing to Spirit Airlines today. SAVE. I made my chart super noisy, but if you can cut through the noise and just look at the candles, right, on this chart, SAVE is down 10% today.
On any news or no?
Yes, on news. They are sweetening their offer to merge with Frontier Airlines. So what I did was I brought up a chart of American, United, Delta, and Southwest, and I compared them to the two low-cost carriers, Spirit Airlines and Frontier, which is ULCC. Look at the huge discount that Spirit Airlines and ULCC are trading at compared to their peers. You know why this is? This is clear as day. It's because Spirit and Frontier don't have the business traveler. Mm-hmm. They cater to the people that are more likely to not fly in a recession, right? Low cost. So
it's also just very hard. I mean, airlines are very hard businesses to like be profitable in.
Oh yeah.
And I don't think anyone has the conviction that long-term Spirit Airlines and Frontier are going to be the ones that can team up and really like tackle this impossible industry to master. I mean, even if you look at the leaders in the space, Delta, Southwest, their stocks aren't good performers either. So to think that the worst ones of the bunch are going to be the ones that are going to do well, I think just spooks a lot of investors off.
And JetBlue is also in the hunt for Frontier, and they're basically punishing the three companies involved in this like menage a trois right now, right? Spirit, JetBlue, and Frontier. I mentioned a few weeks ago that I would be interested in taking like a kind of like a travel trade. I never put anything on, and I don't want to do the airlines, but I could get talked into like an RCL here, Aaron. I think like RCL, they have earnings on is it Thursday? They report earnings. Let me check. Thursday morning, RCL reports earnings. I could get talked to like an RCL or like a CCL here or an NCLH.
To buy one of these cruise lines?
Yeah. Here, let's bring up CCL.
They're just not like interesting investments to me.
They're not interesting to you?
I mean, I get it, I guess, as like for like a cyclical play. You know, you think like the markets are just going to be weak. Buy something that's maybe battered up that has value. Try to squeeze like what 20% out of it or something.
Yeah. I'm just thinking like, I mean, I do think travel is gonna be strong, even if we enter a recession.
You think?
Yeah, I do think that. So, I mean, I already own Airbnb. Maybe Airbnb is not play. I already own Airbnb. I'm not gonna buy more, right? I don't like really buying more. When I buy it, and that's that. I really don't. I'm not in the habit of scaling out of positions. I'm either in or I'm out. So
I might buy some before earnings, a little bit, and then if they're bad earnings and the stock dips, like build an actual.
You have until tomorrow. You know.
Oh, earnings are tomorrow.
Yeah, tomorrow night.
Yeah, probably won't buy anything.
Probably not buy that. All right, fair enough. Okay, I saw this list today, Aaron, from Morgan Stanley.
Oh yeah, I was excited for this.
They put out this list of 45. I don't know if I can remember. I'm sure that it's not that unusual, but 45 of their highest conviction stocks. That's a lot of stocks.
A lot of stocks.
You want to run through the list right now?
Highest conviction.
This is Morgan Stanley's 45 highest conviction stock picks. Can you bring it? You want to bring up the chart as I read them?
Yeah.
All right.
Let me get my Benzinga Pro.
All right. You get your Pro open. And then we got to not forget to do some housekeeping items at the end here. But before we forget. Okay. Morgan Stanley. I'm just going to go in order of sector. So they're listing 4 communication services stocks.
All right.
And those 4 are Comcast. You know what? It may be easier if I just...
Comcast Holdings, ticker CMCSA.
Yep. CMCSA. They like Comcast for its
streaming
temporary headwinds, right? Okay. Warner Music Group, WMG. They expect double-digit top line and adjusted EBITDA growth for the next 3 years.
All right. You like the sound of that?
They like Match Group, which I haven't looked at in quite some time. How's Match Group doing?
Not great, Bob. Down
Not
to
great.
$78 a share. For some perspective, we were at we were at 182. So 182 to 78 in about 6 months.
Oh, that's pretty brutal. And then the last one, I just I don't know.
So you said 4 in the communications
Yep,
sector?
it's Comcast, Warner Music, Match, and T-Mobile is the last one that they like.
What's the ticker there?
TMUS.
All right. I mean, I assume these are all kind of dividend plays. All have like 3. Well, let's check T-Mobile's dividend. I don't know what it'll be.
These are Morgan Stanley's highest. Here, I'll put up on the screen.
I'm not seeing a dividend yield on T-Mobile, but what were the other ones? Comcast. Yeah, Comcast says 2.7%. Match Group probably doesn't have one. Yeah, Match Group doesn't have one. What was Warner Brothers Group?
WMG.
Yeah,
All right.
2%
Let's move on from communication to discretionary, and I've got all the charts up on my thing, so I'll just bring them up here.
All right.
Okay. When I find my StreamYard, where is it? There it is. All right. Morgan Stanley's 45 highest conviction stock picks.
They have new lows of the day, by the way.
New lows of the day.
Yeah,
that's exciting. We're into the discretionary sector now. Ferrari, Amazon, Chipotle, Ross Stores, and DraftKings.
Wow.
Those are the 5. So you can see the year-to-date performance there up on the screen from each of these. Some, like Ross Stores, have held up kind of okay, only down 12%. Others, like DraftKings, are down by half. And others, like, I can't believe Amazon is like getting beaten by like Ferrari, or
gotta be quicker.
Speaking of that, time to do the
how's Fonk doing?
Yeah, how's Fonk doing this? Well, the race is this weekend, so anyway, those are your 5 picks from Morgan Stanley. The DraftKings, I think, is interesting. They forecast legal U.S. sports betting and iGaming to increase from less than $1.5 billion in 2019 to $21 billion in 2025. I don't know why DraftKings specifically is their favorite, but it is. You know why they like Chipotle? Pricing power.
Pricing power?
All about pricing power, man. Chipotle has shown time and time again they can raise prices and people will pay.
Gotta have that burrito.
Gotta have the burrito. Let's move on to consumer staples here. We have 3 stocks that Morgan Stanley is very bullish on in consumer staples. I pulled them up. The first one is, I wouldn't have thought this, Constellation Brands. Ooh. STZ.
Corona.
They're the beer.
Yeah.
Corona the beer. Yep.
Yeah.
They like Constellation Brands. They like Procter & Gamble.
Okay.
And they like the stock I always forget, re-IPO'd. Hostess Brands, Twinkie.
Yeah.
Look at that Twinkie chart this year. Up 8%.
The ticker is Twink.
It's Twink.
Must be a favorite among.
I don't know. Anyway, look at that. We should all just buy Twinkie.
Twink.
Sell everything and buy Twinkie. Stop saying that.
Okay. That's the ticker.
I see that. All right. The 3 highest conviction energy plays. Let's get those up on the screen.
Chevron.
No. Valero. And I'll compare that to Suncor, which is SU.
Suncor.
And then Energy Transfer, which is ET.
ET.
Phone Home.
Dude, ET, there was a time where ET was just an absolute monster on the chart. ET does a ridiculous amount of like daily volume of like oil transfer.
Oh, I don't know anything about the global oil market. So if you say so, I believe you. All right.
I don't really either.
Banks.
I know someone like pitched me on ET a while ago.
Financials. They like Wells Fargo. They like this one that I thought about buying for a minute. They're Raymond James, RJF. They like Charles Schwab. We just interviewed somebody from Charles Schwab, right? Shawn Cruz, TD Ameritrade, owned by Charles Schwab. They like EQH, Equitable Holdings, not a stock I'm familiar with. And SPGI, which is S&P Global, which has been your laggard of the bunch this year. These are the 5 financial stocks that Morgan likes, Obviously, they can't cover their own stock, so they're not going to comment on that. But maybe they should be able to cover their own stock. All right, let's run through these quickly. Healthcare. They like Abbott Labs is their highest conviction name. ABT, which we talked about with Jake, right?
We talked about AbbVie.
Oh, that was AbbVie. Okay. They like Abbott Labs. They like BAX, Baxter. I'm bringing this all up on the screen while I do it. They like, still don't even know if is it Zotis or Zetis, ZTS? Never quite learned how to pronounce that company name. They like Ultragenyx Pharma, ticker RARE, Rare.
Okay.
CVS. I was in a CVS over the weekend.
Was it packed?
No, it's never packed.
Okay.
Intera.
Was the receipt long?
Yes. Natera, NTRA.
I'm not familiar.
Yeah, it's crazy. Down. What is that down this year? 61%. Ouch. Thermo Fisher, medical devices, right? And Eli Lilly, LLY. These are your highest conviction healthcare names from Morgan Stanley. We'll go through. Oh man, there's a lot of industrials. Holy cow. Okay, industrials. I'm not going to bring up the charts. There's a lot of them. I'm just going to read. I'm going to read them to you. Industrials are Wilscott, WSC. They like Eaton, ETN. Northrop Grumman, they like.
Okay.
They called it a dark horse of the defense primes, as the company now has two legs of the modernization of the nuclear triad with the B-21. I don't even know what I'm reading right now.
That sounds scary.
I don't even know what I'm reading right now.
But how can you call Northrop Grumman a dark horse? I mean, they're pretty fucking big.
Transdime, TDG, they like Maxar. They like Knight Swift, which how is Knight? That's KNX. How is that one doing?
How's Knight Scope doing?
Knight Swift is the trucking company, right? Yeah. It's done okay.
Knight Scope not really holding up.
Not good, actually. They like LUV, Southwest Airlines. They like Driven Brands, DRVN. They like Sunrun.
Sunrun.
Speaking of,
hell yeah, that's my.
I know. How is our old friend doing?
Not doing well.
Sunrun.
Not doing well.
Ouch. That's pain.
We got all the way up to like I was looking good on the challenge, and now I think we're back where we started.
Wait, John just said Redbox is halted again?
Yeah, what was the news with Redbox? Their CEO's left. Oh, it's halted to the upside.
Well, this happened on Friday. Again, the same thing as happened on Friday. All right, that's fun, I guess. Real fast, telling that they only have a handful of tech stocks that they like at Morgan. They like Palo Alto.
Okay.
Which has been strong.
Yeah, it's cybersecurity.
Yep. PNW, they like Accenture, ACN. They like Lam Research, LRCX. There's that chart.
Sounds like a Vivi stock.
No. They like Salesforce and they like Apple.
CRM and AAPL.
Yep. And then the last three stocks that Morgan likes, these are their highest conviction plays. Corteva, CTVA, which is a materials play.
Oh, CTRA.
CTVA.
Corteva.
Oh,
Corteva.
And then there's two real estate names. They like Realty Income, and they like SBA Communications, which is SBAC. Oh, look at that O chart. Oh my goodness. SBAC. And those are Morgan's highest conviction names right now.
Hell yeah.
Maybe some ideas for you. Get out of the chat, spammer.
Well, yeah. Well, Spencer, good job finding that list. It's good content.
That's the freshest content. All right. Before we go, housekeeping.
Vegas.
We keep saying it, but Vegas. It is.
You gotta come.
It is the event that
if you don't come, you're gonna see the videos, you're gonna see the pictures, and say, "Hey, why didn't I go to that?" We're gonna say, "Hey, we invited you. All you had to do was buy a ticket, buy a plane ticket."
You're gonna have the worst FOMO. It's gonna be horrible. The entire company right now is focused on Vegas. Everyone is working on it right now. It's going to be our last in-person event for a while. I think until like November, right? So, whoa, we got Rohan here.
Special mic.
And he wants to test out a special microphone.
Special mic delivery.
I just want to ask them.
Whoa, guys, what do we think about this? Do we like it? I love it.
That's gonna be good for a man on the street.
Did you glue this yourself? No, it's just like. He says yes. Oh my God, big fan. Yeah, that's what I meant. The box. Oh, Mitch wants to know if there's going to be pool parties. I don't know. Maybe. So, okay. Vegas is the first thing. Fintoit2022.com. Get your ticket. And the second thing is, by the way, like the video, guys. Please.
Smash that like.
Smash that like.
Tell us you care.
The third thing is Benzinga Pro. Right. Pro.benzinga.com is how to sign up for a free 2-week trial. Everybody gets a free 2-week trial. If you want 25% off, use that link up on the screen. Okay. Benzinga.grsm. I'll just copy it and put it in the chat. Okay. Actually, it's already in the chat. It's in the chat and it's in the description. I'll put it in the chat. It's benzinga.grsm.io/Benzinga Live. It's in the description of the video right now. I'll put it in the chat, and that gets you 25% off just right off the top. Easy peasy.
It's a good deal.
If you guys don't know about Benzinga Pro, it is the backbone of this company. It is what we use. It's what I use the most every single day of all of my, out of all the things I use, all the tools I use Pro the most, probably. There's the link in the chat. Okay. It's got news, it's got research tools, it's got charts, which you can see. It's got scanners. Okay. It's got a signals tool. You can see what stocks are halted as they're halted, price spikes, stocks making new 52-week highs, 52-week lows, unusual options, opening gaps. You have calendars. Everyone always asks during earnings season, how do I see who's reporting earnings? Right here, calendars widget, Benzinga Pro. Calendars. We have analyst ratings, create watch lists. We go to the ideas tab to get some free ideas. SEC filings, PRs, the whole thing. Movers. It's all audio squawk. It's all in there. This project is a nectar of the gods. That's exactly right.
Oh, wait. Shoot. 30-cent Mats is dealing. What's the score?
Steven Metz?
Yeah, he pitches for the Cardinals now.
What? Since when?
Since this year.
Oh, all right. TIL.
30. You a Cardinals? You Cardinals, dude? I didn't know that. My guy.
All right.
Peace.
So that is going to be a wrap for our show today. I'd like to thank our guests, all of our guests today. Everyone from Jake to Shawn to I'm blanking on who our damn guests were.
We had Jake Wujastyk. We had Shawn.
I don't have a calendar tab open.
Jeffrey Kamys.
Where's my oh, that's why.
Jeffrey Kamys
that's why I'm blanking.
We had Matt Hammond from IPO Warriors.
Yeah, man.
We had a great show, Spencer. Way to kick off the week strong on him one day.
Yeah, and I'll be out of the office on Thursday and Friday of this week. So
I don't know if we'll do a show.
I don't know if we'll do a show.
We'll see.
Well, all right. What's coming up next? We're gonna have Moon or Bust, right? The crypto boys. That's what they're called. They're like the Island Boys, but they're cooler. Crypto boys coming up.
Crypto boys.
That's right. Next up, that's gonna be followed by a recording, an exclusive recording of the keynote speech at the Benzinga Psychedelics Conference from 2 weeks ago. You were there. Kevin O'Leary was the keynote, right? We talked about this.
It was awesome.
Him and Raz were on stage.
Yep.
We're gonna air that conversation with Kevin O'Leary and Jason Raznick from the Kamys conference 2 weeks ago. We're gonna air that at 3:00. That'll take us into at the close, and then Money Mitch, and then we'll just that's the day right there. And then then the
report.
Then the Web3 show, then the Rail report. So we got a big day. So smash that like.
And
We'll
stay
catch you
tuned.
guys
Even
later.
if you're not going to watch it, just keep it open on a tab on your computer, on your mom's computer, grandma's computer,
That's it.
cousin's boyfriend's computer. Just leave it running. Leave Benzinga running on the YouTube. Smash us a like every now and then. But yeah, love you guys. Happy Monday. We'll be back tomorrow as always. And stick around for
Moonbust.
or
Moonbust.
Moonbust.
Moonbust.